The information shared during this live stream is for educational and informational purposes only and should not be considered financial advice. I am not a financial advisor. All trades, ideas, and strategies discussed are my personal opinions and are not recommendations to buy or sell any securities. Trading involves risk, and you should always do your own research and consult with a licensed financial professional before making any investment decisions. You are solely responsible for your own trading results. The information shared during this live stream is for educational and informational purposes only and should not be considered financial advice. I am not a financial advisor. All trades, ideas, and strategies discussed are my personal opinions and are not recommendations to buy or sell any securities. Trading involves risk, and you should always do your own research and consult with a licensed financial professional before making any investment.
Good morning, guys. Good morning. Were we muted? All right, I ran through the whole intro, so again, I'm not going to run through it again, but good morning, guys. Jam-packed day. A couple of days of technical difficulties on YouTube, but let me know if we're live now. Let me know if we're live. Good morning, guys. Good morning. Again, make sure to like the video. If you're a first-time viewer, like the video. Long-time viewers, take the next step, join and jump in our community. The goal is 100 likes per hour. 100 likes per hour, we'll do a giveaway. All right, so 100 likes per hour, we'll do a giveaway. We will have FOMC, the decision, as well as the press conference. Okay, we have a ton of things for you today. And SoFi getting crushed. All right, SoFi, 20 is getting crushed. All right, so it was a good thing that we did take profit. Completely crushed. They're down close to 80 and 90%. Okay, so now SPY gapping down and selling off. So what's happening now, guys? What was holding us up earlier was what was holding us up? The Qs. The Qs were holding us up a little bit. They're trying to get above that daily upside breaker. The Dow is dragging us lower. Now the Dow had its way. The Dow had its way because now the Qs are starting to pull back as well. We're trading below the pre-market low. Retrace, reject off pre-market low, 50% retrace. There's a nice little zone for us to possibly entertain. So we'll pay attention to that. Our first key zone comes into play right here, team, for retrace reject. All right, so be patient on that retrace reject. There's a possible opportunity there. Qs are about to get to 50% retrace here. The Dow is looking to get that PML, still not there yet. So far, 3 of the 4 are below PML. 3 of the 4 are below PML. Should we not trade at all into the press conference? I would say don't. If you don't have to, don't trade at all today. All right, it's gonna be very tricky, guys. So make sure your size down. If you have experience navigate through these days, by all means. SPY can possibly see a spike in the IV, possibly back to the 30s, possibly 30, 35 territory when we do get close to that press conference. Okay, so on SPY, we're looking to take a few trades there. Those individual names, guys, the ones that are report earnings, their IV is going to be jacked up. So keep that in mind. Palantir, what a fall off a cliff on Palantir, guys. Palantir, beautiful drop on Palantir. We're starting to see Intel push to the upside. Okay, we're starting to see Nvidia coming to test that 50 EMA on the hourly. Walmart falling off a cliff below PML as well. So a lot of those names are starting to push, guys. A lot of those names are starting to push to the downside. Good morning, good morning, good morning, good morning. Good morning, good morning. So marathon stream today. Marathon stream today. So make sure to answer the poll question so we get a good feel of the sentiment. Good morning, Jose. Gap down 711.69, 711. Thank you for the update. Look where we are, guys. The infamous, the notorious 710. Okay. Notorious 710. All right. The notorious 710. Spies try to head towards that daily downside breaker. So we are seeing a little bit of separation away from that territory. Okay, we are seeing VIX. VIX starting to wake up there. Let's see again above that 1850. That 710, okay, is like glue. That 710 is like glue. The 710 is like glue. The 710 is like glue. Do we have any first-time viewers in the chat? First-time viewers? Let us know where you're joining from, okay? As you're coming in, smash the like button. We got 100 plus people joining us. 10, 15 likes, all right? It doesn't take anything to hit the like button, but it does tremendous things for the channel. 16 bounce right there. 710 right there. See how that kind of plays out. What kind of response do we get off of that? Can we get some separation? Because if 710 can't hold, right, then we can start to slide at that daily downside breaker. Okay, Qs are starting to bounce off that 656.73. Be on the lookout for that retrace reject between that 710.75, 711.12. Retrace reject. Okay, that's a retrace reject watch territory. Okay, we need some bearish candles in that area. VWAP is there as well. Price action confirmation. Price action confirmation. So that's where that retrace reject zone is. So the fact that we're not going to have any cuts or hikes is in the bag, right? So 99% chance nothing happens. So this is possibly Powell's last press conference. So unless he wants to go with a bang and go rogue, okay? Unless he wants to go rogue before he goes out, right? That 99% chance is basically 100% chance. All right, that 1% chance is just saying unless he goes rogue, which he does not have a tendency to do. He just plays by the book. He plays it by the book. Okay. Good night, Tesla. Tesla fell off a cliff, got below a prior day lows, immediately got bought back up. MU and Intel, guys. MU and Intel are out of here, all-time highs. MU and Intel all-time highs. Intel flying. Intel 87.37 shallow retest. 87.37 shallow retest. Okay, if you did take Intel off the open, we talked about Intel and MU and the dynamic between the semis. Okay, so if you just took that, if you're just open and bell trader, then you can capitalize. But if you're not, continue to wait. Okay, continue to wait. Continue to wait. Yeah, if he goes rogue, yeah. We're going to raise the rates by 1 full point. Mic drop. All right, that would be something. I think Powell did a phenomenal job. Okay, I think Powell did a phenomenal job. It's not an easy job to be the Fed chair, guys. Not an easy job, especially during COVID. All right, so that was a lot of uncertainty. You're steering the biggest economy known to man. All right, the biggest economy known. Doesn't get bigger than the U.S. economy. Okay. One wrong move, okay, you turn the ship the wrong way, it's hard to course correct. And if you recall, inflation got upwards of 9% in some categories. All right, in some categories, inflation was as high as 9%. Okay. So, phenomenal job. And I'll give him a A. I will give him an A. Yep, those names are dumping. They're starting to see a nice little buy up off those lows. Walmart dumping as well. So shockwave, some shockwave candidates, early candidates, Palantir, Walmart, Intel, but that's of course into more all-time highs. Possibly Tesla. All right, but the main thing you want to pay attention to today, guys, is before you take those trades, right, assess the IV. Okay, I want you to take a look at the IV. All right, if it means you take no trades today, that's great. Right, that's good. But even if you size down today, that's actually very intelligent as well. Right, anything to protect, okay, your capital. I can't wait until Powell's replays and give him a D. Oh, you want him to cut more rates? Firefly. Yeah, these SoFi, to give you context, is just one contract, right? So they're definitely cooked. All right, let's see if we can break some. We can break down below that trend line support. Only issue is when we start to break it, guys, we're encountering that 710. Right, so now the question is, of course, is the technical setup. You get that nice little leg, you get that breakdown, right? You get that nice little push higher. Let me redraw that for a second. You get that nice little drop, follow through from that gap down. You drop, but with the history with 710, an immediate spike can come in. Right, so there's that level of uncertainty because of 710. If 710 is not there, then that's fine. So you need the ultimate confirmation to take that short. And what that would include is, of course, if the Qs can do the same thing. If the Qs can do the same thing, the Dow can do the same thing. You have that more confirmation there. Okay. ExxonMobil also falling off a cliff. Bars are trying to pick up NVIDIA, right? They continue to show up at that 210.68, 210.66 territory, 210.60s. Yep, IWM testing PML, 100% Lynn. Good morning, guys. Good morning. Inputs. We're going to have that coverage for you. So Powell will be speaking at 2:30. Right, so we'll have that coverage for you, and I will share my strategy as well, my lotto strategy during that time. So make sure to tune in until then. Does Oxy look like a good setup? Only thing with Oxy is keep a close eye on those spreads. Oxy is a little spready. Okay, Dow starting to push lower. Okay, we need these two guys. Okay, we need these two guys to be on the same page. For Jake, what is your prime IV for zeros? So the IV typically between that 20-30 territory is relatively okay. But again, you want to pair that IV with the ATR as well, right? So when it's low IV, low ATR, sometimes IV, you need the IV because the contracts are not going to move without the IV. Right? When it's low ATR, meaning price is not really moving, then that means when you're in the trade, right, the IV is too low and price is taking forever to play out. So now time is working against you. So IV is a double-edged sword, But at the same time, you don't want IV to be too high, because high IV now means you're overpaying for those contracts, right? So to simply answer that question, I would say if you give it a general, like a healthy territory, all right, I would say between that 20 to 30, right? That's relatively healthy. And if you can get that ATR, at least above that 65, 70 territory, then that'll be ideal conditions, right? And the thing is, the environment can change, right? The environment can start to change as well. You can take a look. You can compare the IV to the HV, right? And when you compare the IV to the HV, it gives you a little more context on if we're high in relation to the historical volatility. Okay, we got that nice little breakdown. Okay, let's see if all the index can start to sell off. So if you did take this, right, you have a small runway initially into 710. Okay, and if you can get that nice close below 710, it can start to slide. But treat it as a scalp first, and then see if you can get that nice little break below 710. Preliminary close below 710.16 would be great. There goes the Dow. Okay, that's 710. So you get that follow through to the downside. And you want to take this guy right here. So what setup would this be? What setup would this be? What setup would this be? All right, so compression breakdown. Compression breakdown, follow through from pre-market. Follow through from a gap down. Okay, so in this case, okay, we're actually going to shockwave, guys. I forgot to put and we're in shockwave hour as well. So now that the remnants of 710 is what we want to take. There are remnants of 710 we want to take. Okay, Palantir shockwave watch, NVIDIA shockwave watch, the downside. SPY, of course, 709.93. If you did take that, manage accordingly. If you're waiting, continue to wait. You can use 710 as your stop. If you took that already, if you took it early, all right, see if you can get that into shockwave. There goes the Dow. IWM starting to break down as well. IWM and the 272s look interesting. See if we can hold below 272.93. Okay, trying to rule that out. Let's see if we can hold. Because 710 is up for grabs. That's the issue with 710. Okay. If it was just another level, we can respect it. Okay, we can just say, hey, no, we get that follow through. If we get that nice pushback lower, and we see buyers absorb that buy, if we see sellers absorb that buying, right, that's going to set it up to the downside nicely. I'm looking at the 709s. 709s. IW continues to dump here. Okay. See if we go shooter and fall back lower. See if we go shooter or fall back lower. So if you take this, you take it into 710. You take it into 710, you squeeze a little more off of it, and then you possibly get out. Palantir, see if Palantir can hold below those lows. NVIDIA sitting right at that 50 MA on the hourly. So I want to see that 5-minute candle close below 710.16. For me to remain bearish here, I want no hammers. I want no hammers there. If we fall back under it, I'll be there for it on a SPY. Let's see if we can get the nice little push to the downside. So no confirmation yet. 710 breakdown. I like how the VIX is pushing higher. We just need the Qs to start dumping. Okay, I'll take it right there. I'm in the puts here on SPY. Okay, if you did take that, manage accordingly. All right, so this is my NC. Okay, see if we can create that separation away from 710. 710, let's go. Okay. Okay, that 5-minute candle, continue to hold that body there. So I want to see some separation away from 710. I want the Qs to start selling off as well. What's really just keeping us there, team, is the fact that the Qs are not selling off. Okay, the fact that Qs are not selling off. No confirmed signal yet on Shockwave. Still trying to calculate. But I am in the puts here. Okay, my risk is up here. If we close back above here, then I'll be out of there. Puts are down 3-4%. Because of the history with 710, all right? The history with 710, and now the Qs are starting to push higher. So we need the Qs to hold below VWAP. If the Qs can hold below VWAP and they can hold below that PML, we have a shot, all right? If they reclaim that, we can start to push to the upside. IWM is the winner, guys. Anyone take IW? If you did, good, good, good. IW is very clean. Anyone take IW? There goes Apple, but not trading Apple. See if we get some sort of structural breakdown here. So I want to see a rejection off that PML and that VWAP on the Qs, and the Dow to continue to push lower. If the Qs start to reclaim that territory, and we close back above this territory on SPY, I'll close out. Down 7. Okay. No close. I don't want to close back above it. If we close above that on the 1, I'll be out of there. Okay. Okay, all out, stopped out there. About 10-11% on SPY. So quick stop out there on SPY. So try to take it to the downside, stopped out here. So Shockwave didn't give that confirmed entry. It was more of just me seeing if there was some more room below that 710 into that territory down below, and I stopped out. Stop out. Again, the Qs are starting to wake up here. A lot of those names are starting to broke those lows, starting to continue to push. ExxonMobil, if it can get below that 151.07, that 200 EMA is right there. So outside of this compression breakdown, the 710 is causing those issues. We do have that downward compression as well. Let me clean this up a little bit. So first trade, stopped out. How we doing, guys? How we doing, team? Tesla scalp today, reached my 7 trade limit already. Oh, 7 trades already. Good, good, good. NVIDIA 10%. Beautiful job. Carlos. We're still making those lower highs. See if there's another attempt there. 710, right? If you're it might be best to just wait until we can create that separation of 710. But if Shockwave gives me that signal, confirmed signal with the risk reward box, I'll be there for it. So first trade SPY, stopped out. It's going to be very highly predicated on what the Qs do with this 658.27 territory and that VWAP. If we can go shooter there, that can help the Qs break down. As far as what's hot off the open, okay, we do have semiconductors hot off the open. Okay, MU, Intel, APH. We have SNDK up 8%. Qualcomm reported earnings, TXN. And we have STX as well. Outside of that, and a couple of names of financials, everything else is red or flat. Red or flat. Red or flat. Apple did set up nicely. Just to give you some context, right? Apple. Okay, the IV is at 45. Stopped out 15% IW. Good stop out. And the Qs are starting to wake back up. For us to fill that gap, it doesn't take too much. I'll take this off. I'm going to be watching on another chart just to clean up the chart a little bit. So outside of this compression breakdown, right? We said with this compression breakdown, it's going to possibly break down and then get back up off that 710. Okay, so outside of that, there hasn't been anything else, right? Has been anything else? Okay, Qs are starting to rock and roll here. Qs are starting to rock and roll. Qs are coming back to life. Qs are also slightly elevated as far as IV is concerned. Right, the fact that both the Qs and the Dow are going the two different directions, right, that's what's not allowing us to have that follow through. Looking at QQQ here. Apple calls, good. See if the Qs are what come to the rescue. Shockwave on the Qs. So Qs retest. A little bit of retest on the Qs will be there. If you did take shockwave on the Qs already, manage accordingly. So what's happening is the Qs is taking off and the Dow's getting picked up off those lows. All right, look at the stop out, right? Took it to the downside, stopped out, 10, 11%, moved to the side. You don't want to be wrong for long. Retest on the Qs. Into that 660 territory. See that nice little retest. All my entry in this territory. Okay, on the QQQ, so paying attention to that territory. Back into the highs of the day. That dead upside breaker, or highs of prior day. Looking at the 260s, 660s. The contracts are elevated, so okay, I'll take it right there. I'm in the Qs. My risk is the daily open. So risk is a little tighter than usual, but my risk is daily open. Right here. So my risk is less than conservative. Okay, my risk is daily open. I want us to stay above daily open. See if the Qs can start to go here. they can, that's great. Risk defined. Second trade of the day. Stopped out on the stopped out on SPY on the puts. Second trade, QQQ calls. See, you get a nice little compression break here. See, buyers want to pick this thing back up. The only thing holding us up right now is the Qs, guys. Everything else is red. All other indexes are red. All the other indexes are red. Okay, my NC is there, not all the way at conservative. A little bit before conservative. So a little bit of a tighter stop. Okay, let's see if the Qs can start to take off here. Want that 5-minute candle to start cleaning up on the Qs. Okay, there we go, Qs. You see how it's moving, but the contracts are taking some time to move. All right, that's IV. The Q's IV is through the roof because tech names have earnings today. Okay, a lot of those tech names have earnings. Okay, if we close below there, I'll be out of there. Down 6. If we get that close below daily open on the Qs, daily open right there. So if we fall back red on the day, I'll close out of there. So I'll give it a chance to bounce there. So stop is about a 7-8% stop. Close to 10% stop. Down 7. That candle has 17 seconds left. Okay, I'll close right there at 8. So stopped out on the Qs, minus 8%. Okay, so gave the Qs a shot, stopped out on the Qs. 8%. SPY stopped out 10-11%. So 2 trades, 2 stop outs. Okay, 2 trades, 2 stop outs. Apple's starting to go nicely. Good, good, good. Nvidia. Ooh, Nvidia's IV is 84%, guys. All the IVs are jacked up today. All right, so even though you're right, it's like the contract is not moving unless it gets an oversized move. Okay, so let me find a name that doesn't have a jacked up IV. Palantir, jacked up IV as well. All right, so if you are going to take those trades, guys, take that into consideration and just have those be on point with your stops. Okay, be on point with your stops. Nvidia is breaking down nicely. Apple, if you took Apple, despite the IV, if you took Apple, it is at that 50 MA on the hourly, so keep a close eye on that. Qs are back below the VWAP. Yeah, Walmart is looking good. Walmart is fueling up. Walmart's IV. Okay, better. And Walmart's contracts are a little further dated, so Walmart above 128.99. So our go-to Walmart. All right, so keep those stops tight. If you are getting stopped out, Palantir playing nicely. Again, it's going to be deceiving because the chart is working out, but the contracts are not moving accordingly. So it's almost like you have to get a bigger move on the chart, right? Because that's because of the IV. Okay. That's because of the IV. So first 2 trades, 2 stop outs, stopped out on the QQQ calls. 8%, stopped out on the SPY puts. 11%. So Qs was Shockwave, so stopped out on Shockwave. SPY was to see if there's some follow through behind that move. All right, so unless the Qs and the Dow are on the same page, it's very difficult for us to take this thing to the downside. IWM, sneakily setting up. All right. IWM has got away from us a few times. That PML rejection off IW is nice. Starting to go already. If IWM can get a nice little bounce, come back into that area, I'll take IWM short. So it has a little bit of a buffer into that double bottom. If you took IWM via shockwave, okay, manage accordingly. Apple, scale out. Scaled out 15%. Beautiful job, Firefly. Beautiful, beautiful, beautiful. How are the contracts moving on Apple? Moving nicely, per usual. PMH is right there as well. Anyone holding Apple? So Apple, if you trade Shockwave, and you already take into consideration the IV and all that stuff, okay, Apple comes into play. There's actually three signals on Apple. All right, all calls. So they never got stopped out. Apple's about to hit TP. Oh, beautiful job, Fido. On top of that, taking Intel into all-time highs as well, right? Beautiful, beautiful, beautiful. Intel also went. Double signal on Intel. Apple, freight train. Apple is a freight train. I might have to revisit QQQ after getting stopped out. It is holding that PML. Because if we can hold that PML, we can all see this clear. You guys see this trend line support, right? This is the path that the buyers are taking. Once that starts to crack, it just resets everything. Resets everything. So all their hard work, everything is in the red. Apple is out here. Are you still holding Apple runners? Double calls. TP 30%. Beautiful job, Firefly. There we go. One of our shock wavers. Beautiful, beautiful, beautiful. Not a good day to trade. 100%, Kevin. 100%, right? Walmart about to wake up. A Palantir is out of here. But the IV's jacked up on Palantir. All right, so we did talk about Palantir this morning. All right, Palantir, look at that. Okay. It's going to bring it to your attention. So either way, it's going to bring it to your attention. IWM. I'm looking at the 273s. 273s. Puts, I want to see a nice little shooter there on IW. That candle's inside. IWM. If I can get a nice little shooter there on IW, I'll take it to the downside. In this case, on IW, it's going to be a full unit of risk. So scale out, stop out, hit TP. So let's see if IW can start to reject here. Give it a second. Okay, I'll take IWM right there. I'm in the IWM puts. IWM puts, second trade. Third trade. Okay. If you did take this, manage accordingly. This has room to the lows of the day, 272, 272.51. My risk is up here. If everything can dump, that's going to be favorable for IW. IW is not related to the names in SPY and the Qs. It's its own batch of names, but it's more of a sentiment type of trade. So no close above here. That's my risk. Okay, so IW. See if that can start to break down. Okay, Walmart's starting to go. Keep a close eye on Walmart. SPY's trying to reclaim that VWAP. Again, guys, make sure to like the video on YouTube, guys. Make sure to like the video. Make sure to like the video on YouTube. 100 likes. If we can get 100 likes, we will do the giveaway. We'll be eligible for one giveaway if we get 100 likes by 10:30. So we're trying to get 100 likes per hour to be eligible for the giveaway. Okay. SPY's in that retrace reject zone, guys. Strikers, keep a close eye on that. I'm babysitting IW here. If you're waiting for the structural break, continue to wait. If you're already in, you already know what your risk is, then just manage. Walmart's starting to go. Okay, Walmart is out of here. SPY pulling back. IW, my risk is going to be, let me just put the alert in that territory. So come on. So we get alerted. So it needs to break that trend line support here. So close above here. Okay, I'll be out of there. So that's probably about a 25% stop. But IW, I'm looking to take it to these lows, scale out, or hit TP. See if Walmart can continue. Intel, scale out. Okay. So watching IW here on the side, on the 5. If SPY goes shooter here, that can be something there. Okay, and yeah, IW to start to collapse here. On Walmart, nice push on Walmart. Anyone take Walmart? Closed Apple, made up for IW loss. Beautiful, beautiful. SoFi signal puts. Yeah, SoFi. Take a look at SoFi. Just again, SoFi did report earnings, so keep a close eye on those contracts. Everything's starting to wake up. See if we get a shooter here. IW is down 11, 12%. SPY flipped to the green side. IW had to get stopped. SPY and the Qs flipped to the green side. Okay, IW. Stop out there on IW. So 17% stop out. So 3 trades, guys. Just can't get anything to work in my favor here. 3 trades, 3 stop outs. All 3 of them, I do like the trades. I do like the trades. Just can't get it to work in my favor. So again, we'll see what does take place second shift. All right, frustrating, but that's what comes with the territory sometimes. So it's basically a stock picking market. All right, if you're picking the right name, you can find a win. Walmart's going 20%. Walmart, good, beautiful job. Shoulder, Tesla back at yesterday's lows. Yeah, Walmart has a little room to 127.33. Has some room to 127.33. Intel just can't stop making all-time highs, so it looks like there's an independent run by Intel. Independent run by Intel. IW went right to my stop. Stopped me out and it's starting to go. But again, this structural breakdown is going to be necessary. SPY is starting to wake up as well. SPY is starting to wake up. Look at that. Stopped out to a T. To a T. All right, so I'll wait until second shift. Okay. So all three trades. So puts on IW, stopped out. SPY, puts on SPY. So all three trades so far, all stop outs. Puts on SPY earlier, stopped out. Let's go to SPY real quick. Okay, puts on SPY here, stopped out. QQQ calls, stopped out. So the names that did work nicely were Walmart starting to go. Apple worked out nicely. Palantir to provide a nice little scale up for the puts. Intel, nice continued push to the upside. Hits TP. So the stop outs that took place, stop out. So the only two trades that were shockwave on my end were QQQ and IW. Okay, so I'll wait until 10:30. Again, we have all day, meaning all the way until FOMC. Yeah, that double bottom was too powerful. Right, double bottom was way too powerful on IW. Okay, let's see if we get that nice little push lower. Now we're at that 50% retrace, yesterday's midpoint. And if we take a look at this, guys, if we take a look at this, we're back at this 7-11-33, 7-12-58 territory. So we just created just enough separation to get into 710. Okay, we come into 710, we catch a bounce. And now off of the 710, we're starting to fuel back up. Okay, now we're in this area. So if we don't have enough buyers, we can possibly start to push back lower into that midpoint. Right? If we have enough buyers, we have a chance of breaking above that 7-12-58 and continuing to expand. All right, so that's what it's looking like right now. And we're in this sticky zone. Okay, sticky zone. And look at Intel. Intel is completely gone. So it just can't stop making those all-time highs. It looks like everyone just rotated into Intel today. Look at that. So this one, what did you got you stopped out? If you took this one, stopped out there, and you catch this one, and then you catch this whole thing. If your risk is a little wider, you can sit through that. Somewhat of an inverse head and shoulder out of there. And now Intel is looking to get to that 90. Intel is looking to get that 90. Triple call, yeah, that tells us that we're getting a couple of fake outs, but these two did work out. This one probably stopped out, depending on your risk. But again, if you're persistent with it, if you're still stick with it, eventually it gives you that. Apple. So Apple did gap down. Okay, Apple now pushed all the way. Okay, same thing with Apple. Triple signal. Now it never got stopped out, and Apple continues to go. Retrace, reject, watch right there in that red box. If we fall back below PML, 210.70, 710.79, 710.80 territory, we can start just that slide to continue. Keep in mind, guys, we're inside on the hourly, we're inside on the daily, and we're inside on the daily and the hourly. So keep that in mind. We're outside of that pre-market low, pre-market high range. Okay, so outside of those. Out of those three ranges, the hourly range, all right, the range set from 9:30 to the daily range, prior day's range, and the PML, the pre-market high, pre-market low range. Okay, we're only directional on the pre-market high, pre-market low range. Everything else, we're inside or contained inside of that range. So on SPY, no shockwave, no clear shockwave with risk reward drawn. Again, guys, make sure to like the video. Let's get the likes up. 10 more minutes. Get 50 likes. We'll do the giveaway. Are you still holding Intel? FIDO? Or you're all out? Great job on catching Intel. One left, beautiful job. That's a historic push. Intel now is above that 90, guys. If you can hold above that 90 psychological level, that's a big victory. But don't chase it above 90. Don't chase it above 90. The interesting thing is with Intel, right, it's a solo mission by Intel. Because everything else in the space, okay, AMD flat, Broadcom flat, NVIDIA negative, Intel pushing up, ADI pushing up, APH pushing up, SNDK pushing up. So the memory names starting to push, STX pushing up. In the electronic technology space. Apple coming back for that retest. Walmart did get a nice little push, not insufficient enough to get above PMH. So scalp there, but did not get a scale out. MU starting to bounce here. MU is starting to bounce. Intel, guys, is on a tear. Yep, QQQ. If QQQ can simultaneously break, there might be a second attempt on QQQ. Okay, I'll wait until a second here, second shift. All right, big danger here, of course, is double top. Okay. So just be mindful that these highs are here. Okay, so if you can start to get into that area, that can be that soft TP. If you don't like that formation, then don't take it. But that is a second signal, second signal coming in on the Qs. First one stopped out if you're conservative. Second one looking like it wants to work out. Okay. Okay, Qs are starting to push. Qs are starting to push. How we doing on Google Meets, guys? Intel 110%, IV 100% because it's at all-time highs. For which one, Brian? It came into play when I added everything to look for. 2-bar/break retest or break. Okay. So you can modify that. Okay. See if that first shockwave signal on SPY can get printed. We get that ultimate confirmation. If you do decide to take it on your own merit, okay, you're using that initial signal. Okay, just know where your risk is. But if you want to wait for full confirmation, risk reward to be drawn. You can wait. There we go. Q started to go. Okay, Q started to go. Looks like first shift is all been about persistence. First shift has been about persistence. Qs are starting to go, guys. If you took the Qs, second attempt, manage accordingly. It did hit that top of those highs. All right, so that is a first soft target. All right, if you're doing your technical due diligence. So now SPY's in the jaws of that gap. It did almost fill the gap, 71147. So if the Qs can hold above that initial high there, the highs of the day has room to that daily upside breaker, and then now it's probably going to lead to scale out. Okay, there goes the Qs. There go the Qs. But very short move, okay. Yeah, Shockwave, the folks who did purchase Shockwave, guys, leave a review on WAP. Okay, so it's only been out for a month. All right, less than a month actually. Okay, it gets some time to get used to. All right. So, but when it does go, it does go. Yeah, double call. There's gonna be a lot of, and give some feedback, guys, on what things you guys want to see improved. And there's a lot of updates coming up. This is just the first iteration. All right, the first iteration of the system. With several companies releasing earnings after hours today, what are your thoughts on 1DTE call options put depending on? So the IV on the Qs is jacked up, right? Very high. Scale out if you need to. Scale out on the Qs. All right. Just know today's a game of IV. So if you size down today, you're looking for those opportunities, you're managing your risk, then you can put yourself in position to capitalize off some opportunities. That would be my thought. 1DTE, right? Sometimes the IV lingers into the entire contracts for the week. All right, so look at the Qs, guys. The Qs are out of here. Anyone take the Qs? Or SPY, if you took that retest on SPY, scale out if you need to. That was worth waiting for. That was worth the wait. It's being fueled by the Qs. For this to get accelerated, guys, the Dow needs to reclaim VWAP and push into that 50% retrace the hour. SPY is about to, okay, SPY filled that gap. SPY filled that little gap. So it is at that TOG, top of that gap. Okay, be mindful. You need it to hold above that level. You can start to get a rejection out 71146. Qs, scale up provided. Beautiful job, JG. Okay. Yeah, do not trade earnings. You're a loser. Absolutely. Yeah, it's going to be tough to get anything to work in your favor, especially with the high IV. So you need outsized moved. That's the only way you can combat the IV. All right. So you need that individual ticker you're trading to make a bigger than usual move. Okay. Go, there goes the Q, SPY, scale out. Anyone take SPY? Beautiful job, John G. I was going to say John Q. John G, because I saw the QQQ. Now we're still inside. We're still inside the hourly range, just to give you some context. Context is key. Somewhat of an inverse head and shoulder on NVIDIA off those lows. Intel, guys, is at 91. Intel's at 91. Intel is at 91. Okay, Intel's at 91. SPY continues to push forward, press forward. That was worth the wait. Right, so it's gonna require patience. I've been a little impatient this week. Right, my patience has been a little bit low, so that can definitely be something I clean up. What are a few of the quiet semi-names? All right, so let's just look at the sector and the ones that have smaller allocation. So you have like ON, you have ARM. SNDK was quiet. Now SNDK's cat's out the bag on SNDK. It's starting to crack into the top 5. You have TXN, you have ASML, you have LRCX. Those are less commonly known. And you have ones that are mid cap, a little smaller ones. You even have small cap ones as well. All right, so it just depends on. In any sector, guys, all right, not everybody's going to be the winner. All right. When something starts to, when there's a groundswell for a certain sector, when it starts to become popular, all right, in the beginning, all the entire sector gets lifted. You get all these names starting to pop up. It looks like all of them are going to win. At the end, what ends up happening is there's usually only 3. Okay, we're officially second shift. All right, it's like just think of when Henry Ford released the car. All right, when the car was released, the Model T was released. During that span, during that 20-year window, there were so many car makers. So many. Right? Because there's a huge demand for these vehicles. It's a new marketplace. Right? But when the market gets solidified, it's going to come down to 3 major players. Usually 3 major players, and those 3 major players just control the entire space. And they just start to, and every company in that space that is getting built up, right? Their ambition is just to get swallowed up. Their ambition is just to get sold for a certain valuation. So anyone who has a semiconductor business now, right, or anything related to semiconductor, your ambition is to get bought out. It's not to compete with the big guys. It's for one of the big guys to come and swallow you up. All right? So the big winners are probably going to be the net winners that are winning big now. Right? As long as they have that strong leadership. Okay? Unless you have bad leadership, it's really hard to lose the lead. If you have proactive leadership who's tapped into what's going on, right? You can maintain. You can be in the top spot. A prime example: Walmart. Right, since the 2000s till now, Walmart has been somewhere in the top 15 of the most valuable companies. Okay, through .com, through 2008, through all these different things, has been there. Okay. Yep. Q's guys. Q's is out of here. Semis are getting picked up. Q's out here. Second shift officially. Q's hit TP. Spy's about to hit TP. So the one signal via shockwave calls here. Scale out there. About to hit TP. MU nice bounce off that PML. See if MU can get above that hourly. Q's are above that daily upside breaker. SPY starting to run as well. And this run on SPY, guys, it's a low ATR grind up. Low ATR grind up. Okay, don't chase. Don't chase. PLTR is possibly brewing. Yep, gap has officially been closed. Thank you for the update, Elion. Yeah, oil's at almost at 105. We were saying that, yep, this morning. Right. Interestingly enough, oil is pushing higher, but the indexes are pushing higher as well. So we've got used to the crude shock. Okay, we've got used to the crude shock. Again, guys, make sure to like the video. Make sure to subscribe. We're officially at 10:30. First shift. Took 3 trades. All 3 trades stopped out. 2 puts and 1 call. So you can see the Qs. Let's break down the Qs. The difference between when it worked and when it didn't work. All right. So what was the difference? All right, and I do like that. I do like that trade on the Qs. I do like that trade on the Qs. That's worthy of a loss. Because if it goes in your favor, this is what it turns into. But my stop was a little more tighter on the Qs per usual than that entire unit, because the IV on the Qs are a little bit jacked up. So in this case, this is what I took. So I waited for the Qs to break. Waited for the Qs to break. Come into here, I took the bounce, and the bounce was insufficient, and it started to push lower, got stopped out. So now the number one question to ask yourself is, what was SPY doing during this time? SPY didn't break out yet. Okay, so now if we take a look at this same instance, okay, it comes back into play. Shockwave says take the calls. All right, says take the calls once again. And as this is breaking, so it gives you the exact same entry, guys. It gives you the exact same entry. It gives you the exact same entry, retest that level. Okay, and it starts to go. And this time around, it goes. So in this case, SPY was already breaking out. Can the Qs break out of this, continue to push the upside without SPY? Sure. But that was the two differences. So you can see the entry is very, very similar. Okay, the hammer, nice retest. Versus this one here. So stopped out on this one, and this one works out to a T, and everything is going. And look at that push. So even if you lost here, if you were just trading the Q solely, you can make back what you lost and some. Okay, so the Qs for the win. Qs for the win. All right. And SPY for the win as well. SPY for the win. There's only one signal on SPY today. The shockwave was right here. Hit TP1. Out SPY calls. Beautiful job. Holding runners, beautiful job, Jake. 10% SPY, beautiful job, Carlos. SPY is now at the bottom of the gap from yesterday. So it's entering the gap down, the jaws of the gap down from prior day, which is yesterday. So as long as SPY stays above first shift highs, it's in expansion mode. Okay, it's in expansion mode. All right. Yeah, IWM. All right, did get stopped out on IW. Has not doing much. IW is right at that PML, right at that VWAP. Interestingly enough, guys, the Dow is not making any move. It's below VWAP. So this move that's dragging SPY to the upside is the fact that we have so much strength in the Qs. All right, so the Qs are dragging us higher here. And I would say I'll go as far as to say Intel. All right, semiconductor names are starting to drag us here. Nice inverse head and shoulder on NVIDIA. Apple coming to test that VWAP and that call trigger. Tesla not doing much. So we're rejecting off that level right there. Yeah. Oh, you caught that too on Intel. Beautiful job, Lynn. Yeah, Intel, just good night. Hit 2 TPs. Hit 2 TPs on Intel. Okay. We're starting to see a little bit of profit taking here. So this is the trend line the bulls are using. So boom, boom, boom. Once this starts to crack, right, that can open up the door for the push to the downside. So Intel is carrying us. Yeah, IW not doing much here, but it looks like it wants to break down. Let me do this so that only the last signal gets shown. Okay, give me 1 second. Delete previous boxes. Yeah, so delete previous box. So it only shows you the latest one. So just scalp opportunities on IWM. Outside of that, there hasn't been anything too clean. Okay. IW, you can see that trend line support. If that starts to crack, there can be something there. That 272.93, not only is it that daily downside breaker, it's also that put trigger. So double top off the VWAP, double top off that PMH. That'll be the ideal. Triple top actually off the PMH and all that area. That'd be the ideal entry into the 272.93. All right, if it starts to break there, then it starts to go nicely. Qs are looking to test that PMH. The Dow continues to get sold off. Intel still strong here. Exxon holding VWAP. Yeah, Palantir is just stuck right there. On top of that, Palantir, guys, be careful because the IV is also jacked up. All right, 65%. Okay. All right. But if it's within your risk, if your risk is defined, all you can do is just let it play out. First shift highs. This is going to be a critical level here because if this starts to break, we can start to see that first crack of that trend line support. Since we are pushing to the upside, if you throw the EMAs on the chart, you slap the EMAs on the chart. On the one, you can start to see the waves. Okay, you can start to see the waves there. All right. So that mean reversion will be a break back below this low and continued sell-off. See if we can hold that. Okay. Palantir is starting to go slowly. Okay. SPY needs to hold this, so bulls need to fight for this right here. If that doesn't hold, okay, we can start gravitating towards that 711.50 area, and we can start gravitating back towards that daily open territory. All right, so they need to try to bounce it off of here and hold that trend line support. Okay. Again, guys, on YouTube, make sure to like the video. If you're a first-time viewer, let us know where you're joining from. Intel, Google, Amazon going up. Feel like the rug pull gets pulled any day now over 373.50. Sorry, it looks like the inverse cup and handle on the 5 big one on SPY. On SPY E-bombs. 55% call on calls. Apple, beautiful job. Moving Tesla, stop to break even. Beautiful job, Jimmy. Like number 56. Again, guys, get the likes up. Make sure to like the video. Make sure to like the video, guys. So during the first hour, we fell short of that 100 like threshold. So let's see if we can get that 100 like goal here. And see if we can get to 4,970 subs. All right, we're closing in on a major milestone. So if you're enjoying this content, if you're a first-time viewer, if you haven't subscribed yet, and if you're enjoying the content, you find value from the content, make sure to subscribe to the channel. If you're just jumping in today, we did take 3 trades so far today. All 3 trades stopped out. First one being the puts here, stopped out. Second one being, of course, QQQ calls, stopped out. And IWM puts stopped out as well. So just looking for the next opportunity here. But despite those stop outs, there have been some tremendous opportunities across the board. Right, we did see a nice little push to the upside on Apple. We did see a nice push on Intel. Intel was the winner of the day. Once it broke above that major resistance level, okay, and I had that shockwave as well, that was a tell. So this morning we did discuss Intel. We need that major break above that. There's the level here, right? That resistance. Look at that break. I got that break. Shockwave comes in. So if I put shockwave here on the 15, it does work on the 15, guys. Let me just show you real quick. And you can apply it to as many charts as you want. Okay. If you have the indicator, you can apply it to whatever name you want. All right. So we know this is major resistance coming in. So if we're going to get that break, we need some high volume break, strong momentum break. Here we go. So we get that break above that major level, and then it starts to go. And then it says calls right there, and it breaks, and it never looks back. Okay, it never looks back. It never looks back. Apple. Apple did provide that TP1. All right, calls, TP1, right in the jaws of this major zone. So those have been the two major winners today. Okay. SPY starting to pull back, starting to crack back below that trendline support, headed back towards that 9. So if you did take the puts there, you're looking to target that 9. That's your first initial target. Right, if you like to catch the tops, okay. If you like to catch the top, of course, that 712.06. If you're looking for that structural break of this support and it started to fade on that trend line, that's what I'm going to pay close attention to. And that has room initially to that 9. Okay, let's see if we're starting to push a nice little. Okay. We're inside on the 15-minute candle. We're inside on that 15-minute candle. So the hourly candle during this hour here, we're about 17 minutes into this hourly candle, right? We are seeing that it's starting to get flipped. We're starting to see a shooter. So if we can overthrow, get back below that 711.49, okay, that can start to flip that hourly candle back to being bearish. Okay, back to being bearish based on that candle. We can see that nice little push to the downside. Palantir here is just stuck in the mud. Palantir is just stuck in the mud. We're getting close to that 9 here on SPY. Close to that 9 at that 711.51. So if you're going short, right, you want to see that buyer zone stepping off that 9. And if it breaks below it, slices and dices, it gives you that room to continue to take it lower. Okay, so you can use that as a soft target initially, right, especially if you got it off those highs. And respect that the buyers might come in off of it. Okay, if you're looking for that breakout, downward compression. If you're looking for that 9 bounce, okay, then you're waiting for this to turn into some kind of hammer off of that. Ideally, you also want to see the Qs hold that 660.54. You want to see the Qs hold that level. On Palantir, yeah, Palantir is that. It's holding on for dear life, right? It's holding on for dear life. Good morning, Gary. Tesla starting to recover there. Okay, Tesla's at VWAP. See if we can get that continued push higher. See if they continue to push higher here on Tesla. Okay, continue to push higher on Tesla would be great. Okay. SPY's ATR, guys, it might be at the lows of the week. This is the lowest ATR we've seen all week. 46 cents. We do have FOMC later. Keep that in mind. Nice bounce off VWAP. Nice bounce off of the call trigger on Apple once again. Intel runaway train. Intel has been a freight train. It is just as flat. Yeah, it just needs momentum to break it. Let's take a look at Palantir. Actually, we'll take a look at it on the small screen. I'm really interested here in SPY. What SPY decides to do here. PLTR. Okay, so PLTR. Okay, SPY is starting to break. So if SPY starts to break, that can help PLTR's case. SPY starts to break, that can help PLTR's case. And also, this is the PLTR is very on the higher time frame. It is below that key zone that we discussed this morning. Okay. Intraday higher time frame. All right, so PLTR broke below this level, that critical 138, 138.85, 140.57. We said if it can't hold that, we can see that breakdown. And then we have some major room to the downside now. So that initial leg already took place on PLTR. Okay, so this initial leg, right, if you're in it, great. If you're not, it already took place. So the two things you can try to make the argument for is some kind of a sideways accumulation and then a breakback and a breakdown, or some kind of upward compression, okay, like this. And that's if you're looking to adopt that bearish line of thinking, right? And then eventually that breakdown for that second leg, okay? So PLTR is holding on for dear life after making that massive move to the downside. NVIDIA starting to crack as well. NVIDIA starting to crack. Okay. Anyone else holding PLTR? Who's done for the day? Anyone done for the day? Netflix? Yes, let's take a look at Netflix. Netflix, interestingly enough, guys, Netflix, bigger picture, I would say intraday, higher time frame, not the bigger picture, higher time frame. Netflix is at a very interesting area here. It did get that nice little bounce initially off of here, okay? So if you recall, Netflix, remember, had earnings, and we said it can drop into that key territory, and it started to drop in this area. And now Netflix is starting to go inverse head and shoulder. It is getting bought off the dip. That dip being that weekly dip. And it's holding above that weekly downside breaker. So if Netflix can hold above that prior week's lows after going inverse, it might try to make a run. Okay. Let me just get the exact. Might try to make a run into these. Okay, intraday, into that intraday resistance there. Up there, we do have one here as well. So intraday activity on Netflix, we're trying to make a run here. All right, so Netflix is trying to make a run. Has a couple of obstacles it needs to get past. But if you are in on Netflix on the reclaim, you have a little room to run into this territory. And if that starts to move, then it has room into this area as well. All right, so Netflix is trying to go hammer on the weekly. Netflix is doing everything it can to go hammer on the weekly. As far as right now, say from the lens of shockwave, Netflix, I believe I can do this. Okay, it did do its thing. Okay, let's see how it did. Boom. Netflix comes in, calls above 92.04, about to hit TP. Okay. So it is on a recovery mission. Netflix is on a recovery mission after that earnings sell-off. Okay, it is on a recovery mission after that earnings sell-off. With SPY team, SPY is just sticky in this area, okay? All right, SPY is very sticky in this territory. We need that separation once again. All right, it's going to get very sticky. Bought SPY call this morning on the dip, sold a few minutes ago. 150 to 250. Beautiful job to filthy rich Tesla puts. Tesla, let's take a look at Tesla. Lenses, Shockwave, Tesla. There's nothing on Tesla. But if you do trade VWAP, there can be a potential VWAP compression break brewing. Okay, so it's going to come down to that trend line support. So a lot of these names do have that trend line support going. Okay, Tesla is testing that VWAP. Let me close this out real quick. Okay, so you can see this here. Right, VWAP, it did encounter VWAP there, so it's rejecting out VWAP. Right, so now it doesn't have enough fuel to get below here and continue to go into the lows. Here, look at that trap right there, right? So it breaks and then quickly goes to the downside. So if you're taking that rejection out VWAP, yes, does have that room. Lens of Shockwave. Right. From the lens of Shockwave, there isn't anything there for momentum. Another type of setup, there is. And Tesla is flirting with the lows of yesterday. IWM brewing to the downside once again. Okay, let's see if we can take IW. Second attempt on IW. During this hour, everything is still flat. Okay, I'll take the IWM puts here, second attempt. I'm in the IWM puts. Same risk, same everything. Okay, same risk, same everything. Second trade in IW. So in this case, okay, not the cleanest chart. Okay, but I want IW to hold below this level. Okay, and my risk is going to be here once again. So a little bit of a front run. Right, I want to get that good entry there and see if IW can start to push to the downside. And initial TP can be down here. That can be the possible scale out. And if we start to get shockwave on top of that, that'll give it further confirmation. So IW, second attempt on IWM. Okay, IWM puts. Okay, there we go. If you did take about IWM, manage accordingly. Okay. The IV and IW starting to crank up as well. Okay, there we go, IW. You see how it's dumping and the contracts are not moving? That's IV. This would be my NC. If you want to have a more conservative risk, you can use that hourly candle open. Okay. So you can stay below this. Okay. This might take a little bit of time to cook. All right. So we'll let it get in the oven. And let it cook on the 5. How's that 15 looking? 15 is directional. So unless we overthrow the 15, I'm going to hang on to IW. Okay. And I like the fact that we're below prior day's lows. All right. So if you did take IW, manage accordingly. SPY, even if you're right on SPY, it's taking some time. Okay. So you have to give it a little bit of time to cook. You have to give it a little bit of time to cook. New 5-minute candle here on IW. See if you get that continue push lower. So as long as the bulls don't try to break this and go, the bears will have that control. Okay, they're controlling it, okay, inch by inch, minute by minute. They're establishing control. Okay, so we need IW to break below 272.75. Took profits already for a quick scalp. Good, good, good. Okay, if you are still in the position, know where your NC is, know where your risk is, know where your TPs are. Okay, so see if you can break below those lows, 270, 275 on IW. All right, so today's a great day to use less size, guys. All right. SPY puts are crawling about, yep, everything is crawling very slow. All right, but you can see, we said once we get below these lows, that's when we can see the bears start stepping in. And now they're able to dictate that hour. Okay, there goes IW. There goes IWM. Good, good, good. There it goes. Okay. TP if you need to, guys. IWM is up 11. Okay. IWM is rocking and rolling here, team. I want to get IW into this territory here or scale out. So my risk is automatically moved to that break-even territory. To here, my NC is here. So if it does get that massive wick, then it's just a small loss. We are up 8%. Did see 11. Break below 260, 270, 263. We'll be good to go. SPY is starting to pick up some speed here. See if you can stay at least below that low. Who took IW? If you took IW, dollar signs in the chat. If you took SPY, a nice breakdown. If you took the puts, good, good, good. This can be your soft stop. Okay, IW, nice break there. There you go. IW hit TP. Take a majority off right there on IW. Okay. Thank you very much, IWM. Okay, 13%. We can start to get a bounce off of there. So if we slice right through there, good. All right, see if the runners can start to go. SPY selling off as well. So I want to see a nice push below here. So already TP'd for 13. If you're still in this, manage accordingly. See if those runners can start to run an IW. Up 16. There we go. So we want that support level to get overthrown. My risk is right here. So very, very tight. If we get back above there, then I'll close the runners because now we're bouncing. Okay, I'll close that right there. All right. So close it right there. If you're still holding, okay, you want to see this decisive break. Beautiful trade in IW. There we go. Nice drop. Scale out. IW for the win. Okay. IW for the win. Finally. All right. Finally. All right. Got stopped out 3 times. All right. We finally found our spot, stayed patient, got it to the downside. Okay. The reason why I didn't give another signal here is because, right, sometimes when so it's using that aggressive, and it says scale out because it's assuming you're taking it with an aggressive risk. All right, so we rode this thing to TP, scaled out, gave it a little room, all out now in IW. Okay. Who caught that? Who caught that, guys? Money bags, $signs in the chat on YouTube. Beautiful job, guys. And again, if that setup end up getting stopped out, then it gets stopped out, right? So that's sometimes that comes with it. IWM SPY, beautiful job. Firefly, John, look at our traders, guys. SPY puts working nicely as well. Good. Everything's starting to push. So those trend line supports that you're waiting for to break, they probably start to break down. Okay. All right. So IW, that was a nice drop, guys. It's a nice drop for 43 cents. IW is moving 35 cents per 5-minute candle. All right, so we have to respect this area here. So the trade I took earlier on IW was right here. All right, it was right here, stopped out. All right, but again, in this area, be careful going short right there. That is support. We got to respect the fact that buyers picked it up before. So that's exactly why I used that as a target. Okay, so on to the next one. SPY, if you took SPY, beautiful job. So once SPY fell below 711.49, that opened up that window for us to slide. Now SPY is coming back at the shockwave, draws the shockwave. Okay, see if we get a reclaim. See if we get a reclaim there. Holding QQQ puts off the triple top. Okay. QQQ, nice drop. Just be mindful. QQQ is sitting right at that pre-market high in that 9 EMA. Right, so you want that selling pressure to continue. If it doesn't, we can't see buyers pick this thing back up. Spreads on DIA get now. Yeah, spreads. DIA usually is not the cleanest. Absolutely, guys. Again, make sure to like the video. Let's get the likes up. Let's get the likes up. If you're a first-time viewer, let us know where you're joining from. Long-time viewers, take the next steps. All right. Reinvest the capital. Become a member of our community. So this is one of the only few communities where you can actually learn and apply the skills before jumping in and be in for free. All right. You're essentially in there for free. All right. That's how most people start. They watch a few episodes on YouTube. They capitalize on the information, and they use that to jump in the community, and it's basically free. The only thing you have to dedicate now is your time. That's it. So we're back in this zone at the 50% retrace today and testing that VWAP. That drop on SPY was more beautiful. IW continues to go, guys. IW continues to go. A beautiful job, Daniel. Beautiful job, Judith. So again, stop outs. All right, and that's the nature of it. Sometimes I'm gonna get stop out. It's gonna be frustrating, but I have to deal with that. We have to treat it as a professionals and look for the next trade setup. All right, so don't let one trade completely break you. Don't let it break your mindset. Don't let it break your thoughts about trading. Right? It's just a stop out. How do we join? So if you want to join the community, go to smartactiontrade.com, or you can scan the code on the screen. Scan the codes on the screen with your phone, and join that way. All right, the codes are on the screen right now. Okay. There we go, guys. IW. Those runners are running. Wow. IW has room to go all the way until, let's go to the bigger picture chart. All right, so if you do trade, guys, you can't afford to miss moves like this. So you need to be aligned with our resources and our team. IW does have room. Yep, Lynn, IW got room until 271.96. Yep, I can see that. All right, IW is coming to this area here, that weekly downside breaker. All right, so again, can be running out a little bit of room, bigger picture, but does have room. But it's starting to come into this bounce zone. Where is this bounce zone coming from? Look at this, bounce. Okay, so all that means, okay, all this means is if you're in a position, right, it just means that, hey, you know what, you can start taking your profits. But it's going to be very difficult to take puts right here. You can't take the puts off the lower lows. All right, that's the hard part, right? Taking the puts off the lowest point where IW is into potential lower lows, because this is a zone where buyers can start stepping in. So we have to respect it. We have to pay homage to the zone based on what took place last time. Right? But if you have the entry from here, you have a little bit of a cushion, right? So it didn't close back above here, so maybe I could have done a little better job milking a little bit more off of that, but that's fine. It went to TP1. Okay, so maybe you got out of 30%, 40% of that trade if you did hold that all the way through. All right, but it is starting to run out of room. It's at TP1. TP2 coming up is all the way down here, and that coincides with this zone. Okay, the bottom end of that zone. All right, so SPY falling off a cliff. SPY falling off a cliff. Elevator, staircase up, elevator down. Staircase up, elevator down. All right, they're trying to get this thing back to 710. All right, that's the whole objective. So look what they did here. Okay, so they got it above. They filled that gap. They got into the jaws of yesterday's gap, and they dragged this thing back lower. Okay, and then now that sell-off is resetting us and potentially sending us back to that daily open. Back below the daily open. This thing wants to go to 710. Okay. And what I love about this, guys, is Shockwave didn't give you a false signal here. Because a lot of you might be waiting for Shockwave here, and then it's not going to just randomly give you that signal because it just breaks. There's things it needs to process. So boom, this is just as important. It not giving you a signal in the wrong place, right? It does its best to do that. Is just as important as giving you a signal in the right place. Okay. So very, very important. So complete collapse on SPY. If you're holding SPY, beautiful job, team. Hands off unless pulls back to retest. Good, good, good. One runner left, 28%. Beautiful job, Firefly. Good, good, good. Anyone else? What time is FOMC? 2 p.m. Eastern. So FOMC, we have the rate decision. So 99% chance, no cut, no hike. And they're at the press conference. So there's two things that we need to pay attention to there. Okay. 2 p.m. Eastern. 2 p.m. Eastern. So we will have that extended coverage today, guys. Okay. Still hanging on to, I mean, there's no point in hanging on to this last SoFi runner. Okay. But, I mean, it's just cooked. Okay, so that was a good extraction right before earnings. So this goes to show you the power of earnings, right? When it doesn't go in your favor, this is what can happen. Okay. So these contracts do have time until May, but the likelihood of us getting back to 20 to May 15th is basically, right, it needs to pull the Undertaker, right? If you guys used to watch wrestling, remember Undertaker, he's in the coffin, all right? He just basically wakes back up. Or a Tyson Fury. Okay. Outside of that, it's done. take out FOMC calls. Okay. Thanks, done for the day. Absolutely, guys. Barely green, but I'm keeping my money for tomorrow. Absolutely, guys. Today's actually supposed to be a no trade day. If you do go by the book, all right, because there's a lot of tricky action, IV, a lot of things going on. Again, guys, make sure to like the video. Let's get the likes above 100. Let's get 100 likes before 11:30. We will go over how to join our community. If you want your hands on the shockwave indicator, I'll show you how to purchase that indicator. You have a lifetime access to it. For those of you who did purchase yesterday, make sure to send me a message either in the Discord, either via email, the email that I provided in the Shockwave WAP. Make sure to send me your username for TradingView. Okay? So some of you did purchase but didn't reach out to me yet. All right? I want to give you access as soon as possible. So again, take advantage of that. And Shockwave, guys, does have on Friday's the last day. After Friday, it's going back to its original price. And even that original price, okay, is still tremendously undervalued because you have lifetime access to this indicator, you have lifetime access to this system, and then it continuously gives you the opportunities. All right, but you just have to, when it's wrong, you have to be wrong. You have to know how to be wrong. You have to know how to properly manage your risk, and that's all outlined in the past few webinars we've been doing to help guide you guys properly use the system. And the cool thing is the ones who got it early are starting to get used to it. All right, are starting to get used to it. Do we have any strikers in the chat right now using Shockwave? Has it been past your first week, second week? Are you starting to get used to how it moves? All right, so it takes a little bit of time to get used to. But once you get it down, once you start sharpening your risk management protocols, and when you're wrong, cutting the trade, and when you're right, managing it accordingly, right, it turns into the golden goose. Okay, because you have that indicator for the rest of, unless TradingView disappears, unless trading itself disappears, right, that indicator is yours for the remaining of your career, or unless you stop trading. That indicator is yours for the remainder of the career. So there's no strings attached. There's not that you have to renew it every 6 months, renew it. Is you have access to it because you took advantage of the early bird special. Okay? So for those of you who did purchase yesterday, guys, make sure to send me that email. I want to give you access as quickly as possible. Okay? And make sure to watch that webinar video in the WAP. All right? Okay? All right? It's going to help you become patient. It's going to help you become a systematic trader. That's my goal. There's no way for me to bottle the systems I use. There's no way for me to bottle the strategy, but this is my attempt in bottling a system that can help you, right? If you're willing to submit to the process, that can help you get over the hump, right? Especially during that sweet spot between that 9:45 and that 11:30 window, 12 o'clock window Eastern. All right. So just to be a master at that particular in that window, right? This is the indicator that's going to help you work towards mastery. You're not going to become a master overnight. Okay. Do masters take losses? Yes, they take losses, but they know how to take losses. They know how to bounce back from losses. All right. So I'm excited to see how you guys are utilizing it. Shockwave paid for itself with my first trade. Definitely getting used to it. Been green 4 days in a row now, all because of it. All right. So tremendous job. Firefly, as always, 7-point ES. Good. All right. Now, how's your confidence level, Firefly, before Shockwave and after Shockwave? Because sometimes when we are trading without a system, we have a good idea of the trades we take, but it's not a set blueprint on what to do. It's okay, I'm taking this kind of trade. I have a good idea. I'm waiting for range breaks. And our confidence can waver based on if it works in our favor or if it doesn't work in our favor. But when you have a system, your confidence is in the system. Your confidence is not in whether it works in your favor or whether it doesn't. You're submitting to the system, and you know over a long period of time you have a statistical edge. So you're not going with the ebbs and flows, or if it works today, if it doesn't work today. You know, if you do this enough times, if you run enough iterations, and you control the controllable on your end, and refine the execution, that will eventually work. Right? And that'll give you the vote of confidence. That'll give you the boost of confidence. Right? Most of us, most traders, right? The confidence is based on whether we win or lose. So if you're on a losing streak, your confidence goes down. If you're on a winning streak, your confidence goes too high. Right? So now you can't have both those things you can't have both those things, because confidence too high equals arrogance. Right? Euphoria. That is dangerous. Confidence too low, okay, it creates more FOMO, because what happens is you're seeing your setups, but you don't have enough conviction to take it. And then now, since you didn't take it and it works, now you're paralyzed. Right? So that's why when you have a system, whatever system that you do use, right, your confidence is directly pegged to the system, not to the whether you win or you lose. Because again, the statistical edge is in your favor if you have the right kind of system. All right, and that's the main thing that you have to look for. Right, a system. System is the main thing you need, especially in these conditions and all conditions. These conditions are a little trickier, but in every condition, a system is important. But especially in times like this, if you don't have a system, it's really easy to get lost and confused in all the things that are going on. All right, you eventually, when you start taking those, you don't know who to turn to. You turn to this strategy, you turn to this strategy, you turn to this, you turn to this, you sign up for this, you sign up for that, you sign up for this, and it just makes the matters worse. Okay, so this is my solution to that. Right, this system itself, shockwave itself. All right. 7 point. Yes, night and day. I'm no longer guessing as long as I respect the stops. It's great. I've lost one trade only to make back. That's the mindset. And it's a mindset shift. The link for it, smartactiontraining.com. I'll drop the link again, guys. The link is here. For Shockwave. I do have a special code for this week, webinar code as well. Use the code here. Okay, that code right there if you're interested in grabbing Shockwave, guys. And I mean, you can see the Shockwave on the screen as well, but if you want it on your own, okay, that's going to be very important that you do take advantage. All right, so anyone else looking to purchase Shockwave today, put a me in the chat on YouTube. Putting me in the chat on YouTube if you're looking to make that purchase. If you're looking to make that investment in your own trading, put a me and I'll send you the link in the chat. Okay. Okay, here it is, and I'll send you a special code as well. The link is right there. The code is right there, Jose. Okay. Use the code now. Use the code now. There is a video on the channel about Shockwave, so you can go to our our website homepage. Go to Early Bird Special. Once you go there. Okay, and you type in now. You type in now, and then it gives you an additional 15%. So a small discount. On top of that, it's on Early Bird Special as well. After Friday, Shockwave is going to, okay, $826. And that within itself is an absolute steal. All right, the reason why I keep saying absolute steal is because you have it forever. No strings attached. Okay? No strings attached. It's yours. So again, this is the code, guys. If you're looking to get it, the code is in the chat. The link that I posted is in there. Okay, so SPY is back at that daily open. Guess where it came very close to 710. Now it's just buying time until FOMC. I'm going to take a quick coffee refill break. I'm going to stretch out a little bit. We're here for the long stretch. All right. We're going to be here as close as possible to the close. So get comfortable, guys. Stretch out. If you're sitting down, stand up. If you're standing up, crank out a couple of body squats if you need to. All right. Because we're going to be here for, and then again, if I see those setups, I'll continue to take setups. But I will share my strategy on FOMC the closer we get to FOMC, so that'll be the auto time. If you are done for the day, make sure you don't take any more trades. If you've never traded FOMC before, today's not the day to start trading FOMC. I'd highly advise you just watch how things play out and see how things work out and then see how we navigate. All right? That is just lotto time. That's it. Okay? It's lotto time. So it's not any real positions, any big moves. We're looking to capture massive, massive pushes, okay, for big risk. Big risk, big reward, but very, very small size. All right, so I'm going to go get a refill here real quick. Let's pull up we're going to pull up a CNBC here. All right, and then we will continue the show. In the meantime, let's get 100 likes, guys. We're closing in. Today might be the day we get to 200 likes. If we can get to 5K subs today, that would be awesome. That has been our goal for this month. We're almost there. For those of you subscribed, thank you for subscribing. For those of you not subscribed yet, make sure to subscribe. If you enjoy the content on our channel, make sure to subscribe as well. All right, so give me 1 second here. Let's take a listen here.
Jared Isaacman, the UNAS administrator, who's been a friend of mine for the better part of almost 15 years now, is extraordinary in his vision. We're going back to the moon to stay. We're setting up lunar colonies for science and for manufacturing there. Elon's latest pay package of going and setting up a colony on Mars. But again, this is an irreversible expansion of humanity beyond the bounds of Earth into the cosmos. And it's never been a time like this before. So what people are betting on is the ambition that Elon has and the track record for basically, when he said, I'm going to build reusable vehicles with Falcon 9, everyone laughed at him. Then he did it, and it captured, 90+% of the launch market. Autonomous vehicles, they're here. I love my full self-driving Tesla, and Cybercab's rolling off the line. Optimus, yes, there's amazing companies like Figure AI and others, but Optimus, again, he's got the production capabilities. He's building 10 million square feet of Optimus production plants. The guy knows how to scale stuff, and he also knows how to have an audacious vision that excites people. I mean, the best people come and work for him, not because of because he's got this ambitious vision, and they want to be part of that vision.
Peter, good to have you with us as we look forward to some big changes in the coming year or two. Good to see you. Please come back.
Yeah, no, and this trial is going to be, pay-per-view TV. So let's see what happens there.
Yeah.
What do you think's going to happen? What do you think's going to happen there?
I think there's going to be a settlement of some type. I think there's so much money that's been invested, $122 billion into OpenAI, to roll that back into a nonprofit is going to be very difficult. But there's going to be some middle ground that's going to be reached. And I hate the fact that this is going on, because right now we need to be focusing on how do we make use of this technology to better humanity, and rather than having these squabbles. But it's going to be played out, and it's happening right now.
It is what it is today. Peter, thanks. Peter Diamandis.
Pleasure.
That's great.
Good to see you guys.
You too. After the break, Bill Ackman's Pershing Square going public today here at the NYSE, ringing the opening bell this morning. Actually listing as two separate companies. We're going to hear what Bill said about those debuts next.
Plus, we'll look at California's proposed billionaire tax and the wealth it has already cost the state even before a vote. That's when we come right back.
What does it mean to be rich? It's first steps, and sometimes the last word. Rich is living life your way and having someone who can help you get there. The key to being rich is knowing what counts. Edward Jones.
Storms bring damage. Flex Seal brings solutions. Be prepared with the products that millions trust to keep them safe, dry, and secure. Use Flex Tape for quick emergency repairs. Flex Seal Liquid to keep everything sealed and dry. And Flex Seal Spray to stop all types of leaks. This storm season, defend against damage. Get the original Flex Seal family of products. Available at retailers everywhere. Because it works.
I demand a lot of my body. I'm a singer, I'm a dancer, I'm an actor. Morning! And I know if I want a lot out of my body and out of my mind, my energy, I have to put the right things into my body. Oh, it's good.
With Turo, cars are wherever you want to pick them up. Rental cars are in Section H, Space 45, which is actually back that way. For the right car, right where you need it. Turo, rent a car, not a rental car.
I was 16 when my father passed away. My dad had one life insurance policy. That's why I was able to go to college. Protect your family with life insurance from Ethos. You can get same-day coverage without ever leaving your home.
Check your price today at ethos.com.
Noom's going micro. Micro habits, micro wins, microdosed GLP-1s.
I'm stuck. My weight won't budge.
Been there, but Noom can help.
Bye-bye plateau.
Hello, micro. Get started at Noom.com.
Did you hear? A secret hoard of 1926 $10 gold Indian coins have been found. These gorgeous 1926 gold coins are as bright and shiny as the day they were struck, and less than 500 of these gold coins are available. Coin expert.
Okay, we're back. So SPY worked his way back near that 610 psychological level. All day we took out those lows off that 610. After that nice little break, we got stopped out for the puts there. Continued to climb. Nice little break below that. Started to take its time there. Once it broke that level, nice retrace reject. Slid all the way back below that daily open. And now SPY's back that daily open and flirting with that daily open. So the story has been kind of the same for the rest of the names. But we are seeing the Qs creating a nice little bounce off that VWAP, recapture that daily upside breaker. Outside of the Qs, guys, SPY's a little flat. The Dow is not doing much. IW did get a nice little bounce, but not sufficient enough to get it back to near that VWAP. See if IW has another leg to the downside. We are seeing some movement in Apple's actually been flat. We're seeing some movement in Walmart. Firefly, Walmart. I can be presenting something there, so we'll keep a close eye on Walmart. WMT. When we take a look at Walmart bigger picture, WMT, so there might be back-to-back days on Walmart. When we take a look at Walmart bigger picture, let's see. Let's get a little more context on Walmart. Intraday, we know Walmart went double bottom off that PML. Right, so anything above this level here, that initial targets that PMH. So Walmart, let's see what Walmart is bigger picture. Okay, we got Walmart coming in very close. That trend line support, not quite yet, and it's starting to catch a bit already. Right, so as it comes back up, right, the major level for it to reclaim bigger picture is 127.12, 127.49. Right, if Walmart bigger picture can get above this level, then it has some room to run bigger picture. But intraday, that it's going to be associated with that 127.23. So this PMH is going to be in this jaws here, in the jaws of that zone. Right, so coming into it, we got to respect it for the fact that we did see a price break below it before. We bounced off, it broke below it. So we got to lean towards possibly this nice little retrace reject until proven otherwise. Right, so again, if you want that reclaim, let's see if we can clear that 127.49, 127.50, and then we start to push to the upside. Okay, so Walmart, keep a close eye there. There might be something there. I did break on Shockwave. Okay, so if you did take a view of that, manage accordingly. The Q's starting to push back to PMH. Q's starting to push back to PMH. Okay, Q's pushing back to PMH. Let's go back to SPY here. Let's go back to SPY. Okay, Head and shoulder on SPY. Let's take a look at it. What time frame? The good guy? Right here. I see it. If you're talking about this one, the whole, the entire action from today, left shoulder, head, right shoulder. Is this the one that you're looking at? All right. So left shoulder, head, right shoulder. Yep. Into the lows of the day. Yep. If this trend line support starts to crack, I can see that. Good call. Good eye. Okay, let me just clean up the chart a little bit. Okay. Let's clean it up a little bit. And I'm also going to take this off. Okay, a little messy here. Let me take this off here. To show, no. Okay. This indicator will be available to you guys in the community. All right, it will be a standard indicator that comes with your membership. Okay, it will be available very soon. So these are the key levels to pay attention to. Just clean up a little bit, and I need the cycle lines. Cycle lines are the shifts. All right, so SPY. Very close to 50% retrace today. New shift here, guys. Last shift, we took one trade. Nice ride to the downside on IW. Intel, another push to the upside on Intel. Exxon is starting to push. Exxon is starting to push. Exxon is starting to push here. Exxon is starting to push. SPY is sitting right at VWAP. Right at VWAP. So it's been 2 hours and we have not created that true separation from VWAP. Okay. Yeah, Tesla holding VWAP. See if you can hold that VWAP. Palantir, good stop out on Palantir, Firefly. Good stop out there. Apple, if it can peek back above VWAP. Again, Apple, very hard to trade with the IV. Just from a technical standpoint, okay, Apple, just for that mental trade. If you're just a technician, you want to see how that plays out. See if Apple can reclaim that VWAP and get another signal back the upside. Intel, guys, another break on Intel, flag break on Intel. Okay, 15 minutes of selling, followed by now close to 17 minutes of buying. If that 15-minute counter closes, then it's going to be 30 minutes. Okay. Hello, how do I DM you? You got to be in the free tier Discord. Free tier Discord of the WAP to send me the DM, guys. Microsoft, Google, Meta, Amazon will be the tickers to trade tomorrow and Friday, so I want to wait. Absolutely. Even tomorrow, there might be a little bit of effect of the IV on the names as well. Right, maybe end of the week, possibly, maybe next week. Right, because look at this, guys. This is as jam-packed as it gets. Today is the busiest day of the quarter. Today is the busiest day of the quarter. Okay, we have Microsoft, Apple, Meta, Alphabet, Qualcomm, all reporting today. Okay, those companies combined are bigger than, I would say, 90% of the world's, 90% of the countries in the world, their GDPs. All right, just these four. 1, 2, 3, these five. These four, actually. 1, 2, 3, 4. All right, that's how big of a deal today is. Because Microsoft, Amazon, Meta, and Alphabet are all reporting. All right. The biggest of the biggest are reporting today. And tomorrow we have Apple reporting. Jimmy, I do appreciate your constant interaction in the chat. Let me know if you wanna volunteer as a moderator. I can make you the moderator on YouTube. All right, I am looking for moderators on YouTube. So just give me a vote of confidence, a thumbs up. All right, you're constantly providing value in the chat, and I do appreciate that. Jimmy. Walmart calls. Okay, starting to brew. The fact that SPY is dumping, Q started to dump, that can help Walmart. Initially, that has room at that PMH. If you can hold that level, I'll be there. I'll be there. Let's take a look at Walmart. I want that hold. Walmart. Okay, the contracts are... these are May 1st contracts. Okay, we have the 127s. I want to see a hold on Walmart, and that would be a great trade there. All right, in this case, we want SPY to continue to work to the downside. I want to give it a second here to get above that level. All right, so you get one more push. Respecting the fact that we do have a sell block here, and then we do have PMH right there. I'll respect that. If we can get above these highs, Walmart, I'm on board. The main thing is I just want to minimize the amount of back and forth I'm in. All right, just trying to time that entry so I'm in when it's starting to move. If you already allocate a risk, good. The 130s can be lottos, but they can be tough to go. If it can start to break. Needs to break above that 127.02 for that follow through. 127.02 for some follow through. Walmart did break initially and got stopped out. Market starts to dump. That can be favorable for Walmart. And between the 127s and 128s. About a 3-cent spread. The 129s have the least spread. So think of them as lottos. If Palantir gives up that VWAP, can come back into play. Nice bounce off that level. Reclaim with that call trigger. On SPY, that 15-minute candle on Walmart is inside. So let that get decided there. Want a nice break above 127.02. Okay, for the Walmart calls. As a moderator, I don't think I'll be good. I believe in free speech. I believe in free speech as well. Right? You can. People are entitled to whatever they want to say, but right. Well, one thing we have to understand: one person's free speech ends where another person's free speech begins. All right. Just be respectful. That's it. Our chat is very respectful. All right. That's it. The only rule is be respectful. It's actually good to have cordial disagreement. Disagreement is healthy. All right. Opposing views is healthy. But it has to be respectful. That's the only thing, right? Just respect is key. Respect is key. I don't want to hard enough work on my feelings. Can't control how other people feel. That's true. Yep, can't control how other people feel. That's true. That's true. Right? You cannot control. So control the controllables. Okay. Walmart. See if Walmart can break above that level. If it can do that, I'll be there for it. If it can't, then will not be there for it. So I want to see that break above that level, 127.02. That's the key level. Qs are right at that PMH. Make that 135 now. Okay, Walmart. Okay, I'll go with the 128s. Okay, when the Walmart calls. Full unit of risk. So stop me out, scale me out, or hit TP. All right, so I'll see if Walmart can start to go. These are May 1st contracts, or Friday's contracts. That 15 is still inside, but I'm in Walmart here. That initial soft target can be the highs of the day. Ideally, what will help in this case if his SPY can break this trend line support. Okay, so I'm in Walmart here. Where's my arrow? Walmart calls. Okay, see if we can start to go in the 128s. So an ideal TP, right? If you're looking at TP, again, if you want to trade as a scalp, by all means, but this would be our first highly contested area. All right, our first real test. All right, so if we can't get above that, we'll probably get back to that entry territory. Okay, SPY starting to bounce off that trend line support. The only thing I want actually is the daily. The daily open. The daily. One second. Where's the daily open? It's fine. I can mentally see it. I got to turn everything back on. Okay, let's see if we get that nice continued push. Just got to let Walmart cook here for a little bit. Okay, my stop on Walmart is here. Okay, only position currently is Walmart. Okay, so let's see how that plays out. We'll give that some time to cook. SPY not doing much here. We're at that back that daily open, like we never left. Okay. Now 5% holding. At this point, Intel is just showing off. Yeah, Intel just, that 95 is a reality. The whole point of free speech is when people you don't like say things you don't like or agree with you otherwise. Yep. Holding, okay. Yeah, Intel continues to push. Yep, I do see that. I like you change your candles. Artem. Block out the noise a little bit with these candles. All right, so if you did purchase the indicator, guys, follow the instructions when you do purchase. Make sure to send me your TradingView username. TradingView username is needed. Okay, TradingView username is needed. And then I'll get you access as soon as possible. Q struggling at that PMH. Again, any slide to the downside is going to be favorable for Walmart because that's a rotation into safety. So what's going to be favorable for Walmart is going to be this breakdown. Okay, because we're going to start to rotate to the down names. So I want the Qs to stay below that PMH. Work towards that 9 MA. Okay, WMT. We can watch WMT here actually on the big screen. We'll push SPY here. Not soy, SPY. Let's get to 100 likes, guys. 7 likes away. 7 likes away. Seven likes away. Okay. We will do a giveaway. If we get to 5K subs, I will do a special giveaway. Special giveaway of 5K subs if we can hit that by the end of the month. By the end of this month. So basically by Friday. Okay, Walmart's the position. See Walmart can continue to push. Okay, Walmart doesn't move as cleanly, doesn't have enough volume, so it's not going to be worthy to watch it on the 1. That's like watching paint dry. All right, you have to watch Walmart on the 5, 15, so on and so forth. I'm looking at it here on the 15. Walmart did go inside last 15-minute candle. If we can break those highs, we're going to go 212 continuation. Okay, we're going to go 212 continuation at Walmart. That would be great. SPY is struggling at this. SPY is struggling at this. VWAP, struggling at this daily open. So SPY has been as flat as can be. SPY has been as flat as can be. NVIDIA is banging its head on that VWAP. Nice rejection off that VWAP on Tesla. Peekaboo on VWAP. Got above VWAP. Okay, Walmart's starting to go, team. Okay, if you did take this, manage accordingly as we head into that major test zone area. Okay, Walmart's starting to push. Here we go. Shenanigans, shenanigans, shenanigans. Shenanigans is here. Shenanigans. Look at Walmart pump. Okay, we got that relationship right. So again, Walmart is at that TP territory, guys. Okay, that major first TP, it's there. That major resistance. If you need to take profits, please do. All right, so we need to see if we can get above that. If this candle on SPY turns into a wick back the upside, we can start to see Walmart fade. If that selling continues, we can see Walmart get above that level. Okay, so Walmart up 6%. Walmart up 6%. What I'm going to do for Walmart, I'm going to move my stop right here. So it's either a break even or a green. Let's see if I can ride that out. There we go, Walmart. Okay, there we go, Walmart. Again, those further dated contracts, they don't move as quickly as zeros. If you're used to those zeros going 15, 20, 30% in a matter of seconds, all right? Those further dated contracts, all right? The ones that have a couple of days on them, they take a little longer to play out. Look at the nature in which SPY is breaking down. They needed a shenanigans candle to break this down. So as SPY is starting to break down, let's see if Walmart can peak above 127.20. There goes SPY. Okay, Walmart, I want Walmart to hold above here. That'll be my trailing stop. Who took Walmart? If you took Walmart, beautiful job. Feel free to scale out. Is that resistance? If you want to hold through that, all right, you're bypassing that TP by all means. All right. Okay, see Walmart continue to push. SPY finally starting to break down. Now Qs are at that 659 territory, 659.48. If it breaks below there, we'd be good to go. Beautiful catch, Firefly. Anyone else take Walmart? Good, good, good. Walmart's sitting right at that resistance there. SPY's about to trigger shockwave there via shenanigans candle. Look at that breakdown. Look at that, guys. And look at that. There we go. There we go. You see that breakdown trend line? Support. How that broke. Okay. Shockwave. Puts at 1023. Hit TP already. All right. This kind of candle is so hard to take because there's so much volume and momentum. Okay. So if you take that break initially, you win. If you don't take that break, don't chase. Okay, Walmart, if Walmart gets above that 127.20, we're at PMH and the highs of the day. So see if Walmart can take those out. Walmart's starting to go, team. Beautiful job, Walmart. If you took SPY, if you took that breakdown on SPY, gorgeous. Okay. Okay, back-to-back days, Walmart. Look at SPY, that breakdown on SPY. Off that. Out those highs there. And we're below that 710. See if Walmart can peak above that PMH. Peak above that 127.20. Almost gave me a heart attack. Finally 5%. Okay, good. Walmart. We want Walmart to stay above 127.20. Headed towards PMH. Look at that drop. I'm going to close Walmart right there. Okay. I'll close Walmart right there at 11. Right at that resistance. Didn't wait for that scale out. I'll be good with Walmart. Okay. So thank you, Walmart. And now it's probably going to start to run. All right. So now I'm not there. I'll probably start to run, but that's fine. Okay. If you did take Walmart, congratulations. Okay. We took that all the way to resistance. Nice double digit gain. Hello, new in the system. I'm curious. I'm one who won the prize. Keyword chop. Okay, yeah. So if you won the prize, Carlos, I do remember you winning the prize. Just send me a DM in the Discord. Okay, send me a DM private message. DM just means direct message. Send me a DM in the Discord, and I'll send you the link to the Actually, if you're a member already, you win the boot camp. Actually, Carlos. So you're sending the message via Google Meets. So you are a member, so you won the ticket to the boot camp. So what that means is now just send me your email, the best email to contact you, all right, when the boot camp does come in. Oh, nice retrace reject. Available. Right there. Walmart, hit TP. Okay. Or hit our TP, hit my TP here, which is here. Okay, so I told the team, okay, since we have to respect these highs here, the reason being the PMH is right there, and also the intraday higher time frame, we know we have a major zone in this territory. So it's important for us to have our TP in that area. If you want something more, absolutely, but 11, I'll take it. Walmart's not going to be a fast mover, right? So I won't turn that down. Okay. If you took Walmart dollar signs, if you took SPY to the downside via shockwave, retrace, reject, beautiful job. If you're done for the day, you didn't take anything, beautiful job. Okay. If you didn't if your plan was not to trade today, you didn't trade today, beautiful job. Name of the game today is patience. So again, the only two signals that Shockwave gave us was calls here and puts here. That's it. Since this one went by so fast, it's hard to get that fill. So it gives you that retrace right back into it. You can scalp out of that. And since it's zeros, those contracts they can easily get to double digits. All right, now we're starting to see crude. Guys, crude's at 107, above 106, guys. Crude's above 106. Drop, yeah, shenanigans, 100%, doctor. Finally up 20%, 5%, beautiful job. Are you still in it, Firefly? If you are, good. Manage accordingly. I had puts on SPY morning, sold with a loss. Move to calls. Can I guess candle this direction? Done for the day. Absolutely, Firefly. Beautiful job. The safe thing to do on Walmart is take the profits there, right? Right. Take a majority off. If you want to hold the runners, fine. Last 2 trades, okay, work in our favor. First 3 stopped out, okay. During the day, team, who are the standouts? Who are the MVPs? Intel is clear-cut MVP, okay? Unanimous MVP. Intel, sneaky move on Exxon. Walmart continues to push, guys. We're seeing a small rotation. Keep an eye on crude, okay? Very sneaky move on crude. And we have not made that move in any direction yet, all right? So you might say, hey, you know what? This last drop can be trying to price the move in crude. Not really, because we're still where we were yesterday. Okay, we're literally just less than $1 away from where we were yesterday. Okay, so we're still in that tight range. All right, so new hourly candle upon us. All right, let's get to 150 likes, guys. 150 likes. 150 likes. Wow. Target IWM, you rode that to the downside. Beautiful job, Lynn. Beautiful job on staying with it. So IWM was our last idea. And once it did break below this trend line support, it turned into resistance and it continued to fall. So if you hung on to that, there's a way to still be in there. Signal came in here. All right, so puts there. One IW we're able to extract right there. Beautiful job, Lynn, our resident IWM trader. Walmart scale out. Exxon Mobil flying. Walmart starting to push. Scale out on Walmart. Out Walmart 10%. Good. Spot lose yesterday's lows. Next target 7705. Tesla aborted for now. We'll monitor 372.50, 370 calls for Friday. Sir, please tell me which instrument calls and puts. This is difficult to understand when to calls here and there. This one. Okay, let me read that again. Please tell which instrument call and put. This is difficult to understand. Look calls here and there. This is one. Please understand. Yeah, so I don't provide the signals, guys. There's no time I'm going to say, hey, you know what? Take this, trade that. All I'm doing is expressing the things I'm looking to do. All right, and just sharing the idea. So outside of that, I can't tell you what to buy, when to buy, how many to buy. All right, that's beyond my. I'm not licensed to do that. Right, so I'm not a financial advisor. But what I can tell you is where I like certain things and where I'm buying, and use that as educational resource, educational tools. And then on top of that, what the indicator is saying. Okay, Walmart is gone, guys. So Walmart, if you hung on to that and eventually played out nicely, all right, so you squeeze more than double digits off of that, Walmart is on fire. Okay, Walmart is on fire. Well, like when you say you took calls here and puts here, instead say instrument, please, we can keep an eye on it. Yeah, so Walmart calls, we took IWM puts. Okay, so the last trade was Walmart. So Walmart's the one that I took, using support from Shockwave, using a little bit of that rotation theme. Added the mega cap tech names, added the S&P into the safety names, staple names, and into energy. Okay. Absolutely. And again, I know sometimes it comes by fast, especially for beginner guys. You can always go back and watch the episode. You can always go back, watch the episode. These episodes are designed for you to go back and watch. I try to provide as much context as possible in real time so you can go back and watch and it makes sense, right? So I try to provide that rationale, the line of thinking, the entry, and the exit, right? So it's good for you to go back and watch to exactly see why I cut the trade there, why I took the profits there, all right? why I liked it there. What was the, where was the stop? All right, and those things are very, very important. Appreciate it, Sanjay's 600. Okay. Again, guys, make sure to like the video on YouTube. Let's get the likes up. 150 is the new threshold. All right. The whole point is just to pick things up. Okay, pick things up. If you pick those things up, that'd be great. Had to step away and move my card to the back now. Okay. Dividend 4 targets. Beautiful job. George will teach you how to fish 100%. That's what the whole point is, guys. All right. To make you able to do it on your own. All right. To make you, from a business model standpoint, it doesn't make sense, right? The question becomes, why would you teach someone how to do something when you can just do it for them for infinite time? Right? But that's not the point. The point for me is to teach you how to do it and then eventually cultivate that community, and you'll be compelled to be in the community because there's other people that are refining you and helping you stay on course. Because they're also making the commitment to themselves. Okay, rather than gatekeeping, rather than saying, hey, you know what? I'm not going to tell you when I'm taking the calls. I'm not going to tell the rationale. I have a crystal ball, and I shake the ball, and it tells me when to buy and sell, and you be in the group, and you just wait for the buys and sells. Right? Because I'm confident in the kind of community we're building, and if you do learn how to fish, if you do learn how to be capable, and the things you already know how to do, right? 9 times out of 10, you want to stay in the community because there's other people in there you build relationships with, right? You get used to the routine. You get used to the resources. There's people in there that are going to sharpen you, right? So now if there's someone in there who's new, who's a beginner, you can shed some light. Hey, you know what? You can do X, Y, Z. This tip worked for me. Right? The whole point is iron sharpens iron, reach one, teach one. And then through that, we'll create the best community. All right? We'll create the best community. Okay, that's the whole point, right? That is the whole point. Because again, I've said it before, I've said it a ton of times, but a lot of people that do join us are new. Okay, it's going to take more than a strategy. To crack the code, okay, to crack the trading code, you need more than strategy. Strategy is one component, right? So you can have the best strategy, but if you don't have the other 2 components, okay, you're not going to go far. Or you're going to go somewhere just to get back to where you started. You're going to run out of fuel. All right, think of it like this. You have to drive 100 miles, okay? Strategy will fill your tank for 25 miles. So at some point in time, you can't finish the race. You can't get to your destination because you don't have enough to get there. So strategy, psychology, and of course, psychology / mindset. Right, because psychology is very, very, it's a blanket term. So I would refine that and say mindset. And then on top of that, account management. Account management, risk management, and reward management. So everyone emphasizes on risk management. But you also have to have protocols for reward management. Meaning when you're up, what do you do? All right, so when you put those 3 things together, okay, so you fill your tank. Now, okay, your tank is full. You have to drive 100 miles, okay, and you have 100 miles in your tank. Now the hard part is doing the driving. You have everything you need. Now the hard part is doing the driving, the physical driving. Getting behind the wheel and staying focused on the road and driving, not getting distracted. Because you only have 100 miles, and you have a 100-mile destination. right? So a lot of the things with strategies, we think strategy is going to fill up our tank and get us to our final destination. It's not. It doesn't matter what the strategy is. Even shockwave itself, on its own, it's not going to get you there. Because your mindset, right, won't enable you to use it properly. Improper risk management won't enable you to capitalize off of it the right way. Okay, so those three are the three key pillars. Okay, those three are the three key pillars. And the longer you do this, you start to realize, matter of fact, once you have strategy and once you have your setups and you understand the technicals, that actually goes lower on the rank. Because now what you're really looking to refine is the mindset and the psychology. That's what it really comes down to, right? But in the beginning, there's such a huge learning curve. You have to learn everything. And once you get over the technical learning curve, right, it really comes down to, I would say 80-85% of it is between account management and mindset / psychology. Right? And then that determination for you to stay in the vehicle, you have enough miles. Okay, you know where your destination is now, just to continue to drive. Don't get distracted on the side. Okay, sometimes you might get a flat tire. Okay, change the flat tire. After that, continue to drive. All right, don't get distracted on the road. Okay, so that's what I would say is what it takes. Okay, that's what I would say what it takes. Again, we're going to have the FOMC, guys. FOMC, the rate decision. We have about a 99% chance, no cut, no hike. And we're going to have that press conference for you as well. Okay. Believe it or not, it's spy calls. I don't believe manifest. I believe in the authority of Jesus. Anyone analyze the spy? Amen. Recovery. Spy needs to go inverse head and shoulder. Possibly. Do you have a subscription to TradingView to use Shockwave? Apologies. You don't need you can have a subscription to TradingView. You can use a free tier. I highly recommend that you use the subscription, at least the essential. But you can use the free tier of TradingView to use Shockwave. Right, you can use the free tier of TradingView to use Shockwave. You just have a ad. The ad is like the size of this CNBC box here. All right, Walmart, nice 212 continues to push. Anyone still riding Walmart? Anyone still riding Walmart? Okay, if you are, tremendous job. Okay, Sam Patel, sometimes the car breaks down and you have to walk or crawl to your destination 100%. Right, sometimes the car breaks down. You got to pull a Flintstone. Okay, you just got to cut a hole in the car, the bottom of the car, and start just using your feet. Okay, you got to start using your feet. All right. But I'm using that analogy to emphasize the point that you're going to eventually, if you do this for long enough, you have everything you need. Everything you need is already inside of you. Okay? If you're a beginner, now it's a quest on getting everything you need. Learning the core tenets of risk management, learning the core of technical analysis, learning the importance of psychology. And unfortunately, psychology, the way we learn psychology is by making mistakes. Right? We don't really know what our psychology is until we get confronted with our own psychology, until we get confronted with our fear in real time, until we get confronted with our level of greed. All right? There is inherent level of greed all of us have inside of us, right? It doesn't matter what anyone says, it's in there. right? This is very similar to your flesh, right? The inherent, those default desires, right? You're going to start confronting those things on this journey. And you have a choice, right? Are you going to put parameters in place to eliminate it? You're not going to be able to eliminate it. All right? You cannot eliminate it. You cannot just one day just say, I'm no longer going to be greedy anymore. That's going to be, what you have to do is you have to put things in place, okay, to contain it and just allow it to exist in this certain area. And it doesn't get overblown. Right? Put measures in place, guardrails in place to cage it. Basically, you're taking a wild animal and then you're putting that wild animal in a zoo. All right? So if you think of your fear and your greed, think of it as wild animals. You're not going to just be able to remove it overnight. So what you need to do is, okay, let me just contain it. Let me put this thing in a controlled environment where it doesn't start to peak back up. And as you have it in a controlled, isolated environment, you start to do that inner work and start to say, what is the real cause of all this? What is it? Right? And this stuff can get really, really, really deep, guys. The psychology stuff can get really, really deep. All right? Why is it that when I'm in a trade and I'm green, I intentionally go red? Right? There can be elements of self-sabotage. There can be elements of not feeling worthy for the trade. A lot of things subconsciously that take place. And as a trader, you're confronted with dealing with these things. Okay, each one of us are confronted with dealing with these things. You can't ignore it. Right? You can't ignore it. In the very beginning of my journey, what I realized and had to correct was I felt more comfortable in drawdown than I did up in a position. And it always baffled me. And I had to go do the internal work. Right? It would just always amaze me why when I was in drawdown, I was comfortable. I was like, okay, I get this mindset of let it play out before I started to adopt risk management protocols. But when I was up, right, I would feel uncomfortable. Right? You'd get shaky. Right? So you have to confront what that is. So, and when you confront what that is, you get to the root cause, then you can start to move forward from it. All right? So before you can even confront it, you have to be able to contain it. Okay? Take this wild animal, fear and greed, put it in a zoo. And then over time, you start to analyze it and see where it came from, how it started, and address the underlying things. And that has nothing to do with double top, double bottom, bull flag, mean reversion, liquidity grab, inefficiencies, fair value gaps, inverse fair value gaps, you name it. VWAP reclaim, break and retest, shockwave 15, orb 15, orb 5, orb 30, has nothing to do with any of that. Because that's always going to be there. That psychology is always going to be there. And that's the beautiful thing about trading is it allows you to confront these things that the world allowed you to hide from or mask in real time. And if you want to get over the hump, you have to confront those things on an individual basis. And that basically encapsulates what the trading journey is. Okay, that's what the trading journey is. Okay. Walmart continues to push. SPY looking to push back those lows. Series of lower highs. Okay, I was out planting plants and missed the huge red candle. Yeah, that red candle looks like it was clean, but it was actually a shenanigans candle, right? The way it played out, it was very, very erratic. It was very jumpy, very. So when you look at it after the fact, it looks like, hey, you know, we just dumped. No, in real time, this was a vicious, vicious candle, right? It was a very shaky, very unstable. Tesla puts, we'll take a look at. I'm in the calls. Me too. Back to testing yesterday's lows. Yep. Yesterday's lows, I got at that 709. 25 territory. Palantir, okay, might be brewing a nice breakdown on NVIDIA. NVIDIA selling off, Q selling off as well. Q's did trigger a shockwave. Speaking of shockwave, I do see some of you did purchase shockwave, guys. Make sure to follow the instructions when you do join the WAP, and make sure to send me a DM. All right, make sure to send me a DM. And you provide me with your TradingView username. TradingView username is needed. I need your TradingView username to grant you that access. Okay. $7.10, the infamous, the notorious, the legendary $7.10 is back. Okay. Inverse head and shoulder off $7.10 if we don't make those lower lows. Possibly there. Everything you're expressing, what you run away from, after what you run away runs after you. You need to face it, needs to be addressed. It's essential 100%. 100%. All right. There's two things, guys. All right. We're all running. It's either we're running away from something or we're running towards something. We're all running. It's those two things. It's either you're running away from something or you're running towards something. Right? And ideally, either the shift needs to take place. You need to go from running away from something. That's how we all start. And then focus your eyes on running towards something. All right, we're all, so it's a race, okay? It's a race. Exit at 371.20. Okay, Walmart continues to pump, guys. Walmart is back above. As above that weekly level. It's headed towards that 200 EMA, so possibly could have sat through Walmart a little bit, but the fact Walmart just takes some time to go. Those contracts did have some time on them. Let's get a check on the likes. And for those of you who didn't leave a review on WAP yet, guys, make sure to try to get a review in, especially if you've been in the community for a month, for multiple weeks, all right, before the month wraps up. I would highly appreciate you leaving a review on WAP. SPY back at 710. If you don't know what 710 is, today you'll find out what 710 is about. So imagine if we just hug that 710 until the decision. Walmart continues to push. Tesla. Potential candidate to the downside. Tesla. But they try to push Tesla lower, but buyers pick it up every time. So for Tesla to break down, we need to get past this major area of support, that double bottom territory. All right, so it might be a little overextended to the downside. So the best way to approach Tesla is take the shorts into that level, see if that level has a little more juice below it. Exxon and Walmart are on a run. Exxon and Walmart are on a run. Okay, Exxon and Walmart are on a run here. Who's done for the day, guys? 100% Elion. Who's done for the day? Any done for the days? Oh, who's on lotto mode? Apple, nice little break there on Apple. Intel's starting to cool off a little bit. If you're looking for Intel reversal, if you want to be a contrarian, possible head and shoulder on Intel brewing. Just be mindful that the IVs are a little jacked up. We're at all-time highs. Intel. See if we get one more push. This could have been the push, but see if we get one more push. More of a structural push. It looks a little cleaner on the 5, waiting for that right shoulder. The shallowest level on Intel to get involved is right here. So that does have a little room to drop, and take it level by level. You can use those targets as the levels. Okay, you can use those targets as the levels. All right. So today, 5 trades so far. 3 trades, first 3 trades stopped out. And the last 2 trades worked out. If you did miss those trades, make sure to go back, rewind, check to catch the episode, watch the replay. And the stop out trades, I do like those trades, right? So I do like those trades. I do like those setups. Spot that inverse head and shoulder does look apparent. I have that right there. As long as we don't make lower lows, that can come into play. Tesla did provide scale out to the downside, but just buyers continue to push it back up. So very similar to what we saw yesterday. If you guys recall, by the time it was midday. Matter of fact, we can go over it rather than me just talking about it. Okay, let's go back to yesterday's action. Yesterday's action. Okay, you see that midday downward compression? And then we get that break. Very similar to what we're seeing now. Okay. Downward compression. Just taking place a little earlier. If the indexes and the Qs start to slide, we can start to see Tesla start to slide. Who's done for the day, guys? Does Shockwave have sound alerts? You can program the alerts on Shockwave, but that can be a future update to get the automatic alerts. Nexus. Okay, another red. We'll keep trading, okay. Again, if you're just getting stopped out, right? If it's within your stop, I know it's frustrating. But just stick with it. Generally, I'm a swing target trader, meaning I trade for zone to zone, while wide open spaces usually average over 200%. Yeah, those runways, wide spaces can play out nicely. Are very different. What's the average? Depends. Tesla being pain. Yeah, Tesla wants to break down. Everyone can see that. That trend line support right there, those lows, Tesla. Right, looks like it wants to break down. So I already gave a nice little breakdown. If that starts to crack, that can give Tesla what it needs. But in this case, we need the Qs to dump as well. Okay, we need the Qs to dump as well. So we are past that shockwave hour. We are past that shockwave hour, guys. Make sure to like the video on YouTube. Make sure to subscribe. Let's get to 150 likes. We'll do the giveaway. 150 likes. 200 likes, we'll do the giveaway as well. And we will do a giveaway at 5K. A special giveaway for 5K. So you can put these sound alerts manually on Shockwave, Ken. First time here, I'm looking for a first trade of the day, generally risk $100. So if you're looking to have that small risk, wide reward, right, more than likely you're going to have to jump over to the bigger picture time frames intraday. All right, so in this case, if I'm looking to risk 100 to make something a little larger, right, and now looking for those immediate scalps, okay, so because if you're looking to risk 100 and you make 500, right, that's probably not going to be a scalp. That's probably going to be a nice balance of a key level, key zone. You're going to have to sit in the position for a little bit of time. You have to let it cook. Unless, all right, in the rare case where there's immediate volume coming into that push, all right? So to get 500% immediately, right, it's going to take some, it's going to be difficult. So in this case, 500% would be, you would have to wait for those bound zones, come into those bound zones, maybe get some confirmation on the 15 and the 5, get multiple time frame alignment, and then look to take it, right? So I would say if the risk is 1 to make 5, I would say possibly avoid the scalps, because the scalps are anywhere from 1 to 1, 1.5 to 1, 2 to 1, because you're getting quick pops in your favorable direction. We are at the lows of the day. We are at prior day's lows, yesterday's lows, daily downside breaker. Do we get a nice little sweep of those lows? Potential inverse cup and handle brewing. Handle is starting to brew. NVIDIA, yep, NVIDIA via Shockwave. NVIDIA, good night. That's all NVIDIA wrote. Went all the way to TP. So if you have Shockwave, and there was only one trade on NVIDIA to the downside, okay? There's actually two. There was one here as well. If you had after hours, Shockwave on after hours, this was signaled, right? But NVIDIA is coming into that territory. NVIDIA fell back below 210. With minimal ease, with ease. Tesla starting to break that support. So in this current shift, we are starting to see that nice little sell-off here. Palantir still brewing. Down goes MU. Intel testing that 9 EMA. Testing the lows of the hour. Exxon continues to push. I don't like how the chart gets squeezed every time. If you're looking to go short, right, maybe potential inverse cup and handle. If you're short already, by all means. Tesla's breaking down. If you took that flag break on Tesla, good. Tesla's starting to break down. Qs are starting to break down. There goes Tesla. Tesla. Right, you can see this on our striker chart. You see this nice little break right there. Nice little break right there. It's going to correspond with the Qs. If the Qs are falling off a cliff, SPY continues to fall off a cliff. More than likely, Tesla will do the same. Okay. And on top of that, icing on the cake if XLY is falling off a cliff as well. So in this case, SPY is trading below prior day lows. Is there any buyers here? If there's no buyers, we have room to go all the way into 708.68. Okay. Tesla 368. Next target on Tesla is 369.26. And then you got 368.40, which is that weekly level. Okay, Tesla's starting to break there. Tesla. I'm waiting for that Palantir breakdown. If SPY starts to get bowed off those lows, we can start to see all those names that correspond to SPY start to bounce. If we grab these lows, hold back above that daily downside breaker, dip by mean reversion back to 610, possible. Okay, this is going against the current. Okay, so just know that. If you're fully into the trend, if you're fully a trend trader, retrace, reject. IW, guys, just fell off a cliff. Yep, Apple going back up. Having a hard time at that PMH, though. At 270 psychological level as well. Are you in the calls, puts, Lambish? Now SPY. Yeah, another breakdown there. You caught that last one. Beautiful job. Just in time. Or did it come after? It's okay. You'll bounce back. Lambish. I mean, mistakes happen. Mental errors happen. Sometimes we get caught off guard. We hold it a little longer. But you just want to keep that to a minimum. All right. That 5 minute is inside. That 15 minute, we are seeing some selling. If you're looking for a nice bounce off this territory, let's get a 2-candle combo. Okay, the 1-candle combo will be the engulfer. 2-candle combo will be that 2 down, 2 up, or that 2-1-2. So there's a series of things we want to see in this area. Looking for ultimate confirmation via the 15. If you're looking for the 5, 2-1-2 might be on the clock. All right, if you're looking to go short, what you're waiting for is that nice little compression breakdown. Okay, let's see if we get a nice little reclaim for the mean reversion. SPY, look at the SPY contracts. Does anyone recall what the SPY contracts IV was this morning? Does anyone recall what the SPY contract IV was this morning? Okay, now those contracts, the IV starting to crank up. It's at 36. It's at 36. Okay, so IV's going up. Contracts are losing value at an exponential rate. So if you do take those positions, the move has to take place in your favor fairly quickly. You're fighting a battle on two fronts, on the time side and the direction side. Time and direction. I want to see how that 15 looks. So this is basically just lotto. Lotto territory, lotto window. Okay. That mean reversion has room into that 9 EMA. That mean reversion has room into that 9 EMA. Then it can start to fade. Yesterday, what did we take yesterday, guys? Shooters. Shooters. Remember? Back-to-back setup on SPY. Shooters. So no trades yet on SPY. That mean reversion was nice. Grab those lows. So if we can get the same setup we got yesterday, we hit it on the head twice. Yesterday. Shooters. Off the key levels. 710. That 9 EMA. Use this territory as resistance. Okay, that can be a potential idea there. Okay. That could be a potential idea there. Absolutely, guys. If you guys are done, make sure you're done, guys. Tremendous job. I will see you tomorrow, Gary. The contract prices are starting to go up. So what's happening here is, I've explained this before, but I can explain it again because it's so important. What's happening now, guys, is this is the contracts. Okay, this is the life of a contract. Life of a 0 DTE. All right, it has a very interesting life. It doesn't live long. Okay, very short life. Okay, so this is when the contract is born. It's set at a certain price, all right? Based on what the underlying is, of course. And by the end of the day, that 0 DT is going to go to 0. Literally, it's going to be worthless, right? Almost like it never existed. Okay, so 0 DTEs are just living on the fast lane. All right, once we get past that midpoint of the day, what ends up happening is the theta. So what starts to take the value out of those contracts is theta. Okay, a Greek called theta. Okay, it's referred to time decay. What happens is when it starts to get past the halfway point of the day, the theta starts to accelerate. It starts to lose value at a quicker rate. Okay, for the first part of the day, during our window, our trading window, theta is there, but it's not as aggressive as after our window. Once it gets past 12:30, 1 o'clock, when it starts to get into after lunch territory, the theta starts to crank up, and the contracts start to lose value at a quicker rate. So in this case, if you're in a position after 12:30, 1 o'clock, and your position is stalling, and say if it stalls for 10, 15 minutes, and you're looking for a big pop, this 15-minute stall, even though the underlying did not lose that much, those contracts will lose because you're fighting against time. Right? So on top of that, what's happening is since today we have FOMC, right, in this territory here, about 2 o'clock, right, in the heart of that acceleration where the contracts are losing maximum value, what's happening at the same time is we have another variable, which is IV, implied volatility, which is designed to price the moves on the underlying in. What's happening now is the IV started off, okay, relatively normal, and is starting to crank up as we go into FOMC, because it's basically giving the contracts a buffer to price in any volatility. So now during this time, what's happening is two things are happening in the background, behind the scenes. The contracts are losing value at exponential rate, 1. 2, the contract's price is increasing. Okay? So it's almost like the net value is getting lower, but the price is getting higher. So that is what you're left with. You're left with buying something that is overpriced and losing value very quickly. What does that translate to on the technical side? So what does this mean on the technical side? So what does this mean on the chart? On the chart, this means the only way you can really start to make money, right, outside of lottos, but from a strategic standpoint, just standard, is you need continuous moves in your favor. Let's say you're taking the calls. Any stall, you started to lose value. All right, so if there is a trend, you take those lows into those highs, you can start to take advantage of that because price is moving in your favor. Sure. But if in the case where it's doing this and you're in the calls, not really doing anything, you're losing. So on days like this, okay, especially on days like this, you're fighting a war on two fronts, on the directional front and on the time front. Okay, let alone the directional front is the technical side, is you being right on the direction on the chart. The other one is the time side. So in this case, this translates to, okay, low or poor conditions, not ideal conditions. We love to use sports analogies. Think of this like a game in Buffalo, an away game, all right, for a team that plays in a dome, football analogy, or let's say the Falcons, okay? The Falcons playing in Buffalo in December, and it snowed 15 inches. The game still has to be played, but if you have an option, in this case, you have an option to play the game, okay? You don't have to, but if you're going to play that game, okay, you have to take into consideration the conditions, inclement weather. So you can't do what you usually do. You can't throw the ball wherever you want. You're going to have a more conservative approach. Okay, so that's what we're stepping into now. All right, so in this case, it's either no trades or pure lottos. All right, and on the lotto side, all right, you don't want to take too many lottos because you're going to start to tap into the gambling side of things. There's a fine line. Okay, so that's where we're headed to now, and that's why we're seeing the IV starting to crank up. Okay, that's when we're starting to see. How much is Shockwave? Shockwave, one payment of $4.97. One payment of $4.97 for today. For this week, I do have a code to save 15% off. Lottos means exactly. So lottos mean your risk is losing the contract or at least 50% of the contract. So your edge or your hedge is the entire contract. All right, so yep, so so Shockwave is available and it is for purchase, okay? If you do plan on purchase Shockwave, put a me in the chat. I will send you the link. What needs to happen at FOMC for bulls to move? It depends where we are. I would say during FOMC, if we're near the lows of the day, we can get some sweeps of those lows, drive us to the highs. Ideally, if it's gonna be FOMC and we're at the very highs of the day or near the highs, we might grab those highs and drive it to the lows. So the inverse. Because what really takes charge there is the algos. Because now they take charge and they're trying to price everything in and restabilize and become efficient. So you start to see the behavior of the algorithmic trading models. All right, so you start to see it. It's like I think his name was Steve Irwin, the crocodile guy. Rest in peace, right? When he marvels at animals from a distance. Same thing. So when you're watching FOMC, you get to see the algo do its thing, become as efficient as possible, engineer liquidity, rebalance. And if you understand how to capitalize off those moves, if you understand how the algo works, there's some strategies you can use to capitalize off of that with very, very minimal exposure to your account. You're welcome, Fishman. Okay, so very, very important to see it, and it's fascinating. I love to see it. And matter of fact, I literally have a book titled, okay, the ebook that's available to our strikers. All right, that is inside the Discord, guys, the SAT ebook. Okay, Mastering Smart Acting Trading Principles, Unlocking Algorithmic Day Trading Strategies. So I have an entire book that talks about that and what principles you can use, the main principles as far as key levels, inefficiencies, and how to capitalize off those key levels and inefficiencies, how to draw those key levels and identify those inefficiencies. And so if you haven't went over the book yet, guys, if you're a member, that comes with your plan. Okay, so make sure to take advantage of everything that comes with your plan. The book, the course, all the tools, all the resources there for you to use. All right, it's there for you to use. Okay, we're starting to get picked up here at the upside. Do we get a break here, guys? Did we get a break here? Guess where we are? 710. Back at that 710. So this is make or break. All right, this is either we get that full breakdown back to those lows, or we start to create separation away and start to push that daily open. So shooter, watch. IV starts to crank up. A shooter on the 5. Shooter across all the names. Apple does report earnings tomorrow. Apple continues to push. Apple, we did discuss Apple on that reclaim of that VWAP. Apple did present opportunity this morning on Shockwave, but we told our traders avoid Apple for today. IV might be a little elevated, okay, because Apple does report earnings tomorrow. If you take those things into consideration and you're still okay, then you can opt to take it, but I would highly advise just laying off those names if they do have earnings on the particular day or earnings the very next day. And if you do go over that ebook, guys, that is all you need. As far as key levels are concerned, all right, that's the only key levels you need. All right, everything else is just extra. Okay. I'll challenge you to use those key levels highlighted in the ebook. Okay, and just pay attention to what takes place, just for 1 week. Just see what happens. All right, just see what happens, and you'll see how things start to play out. Okay, so we get that shooter there. Okay, we need that synchronized selling across all the indexes. The usual shooter breakdown, 5 for 5, can come into play. And it's very short. Okay. Okay, for those of you who do purchase Shockwave, guys, make sure to follow the instructions. Send me your username, TradingView username, via email, the email provided, or send me your username via WAP. TradingView username, I need your username. The script is invite only. All right. It is invite only. PLTR just hugging that VWAP, refuses to quit. Nvidia continues to sell off. Apple said good night. Apple said good morning, I should say. All right, rise and shine. Apple continues to go. Initially came in there. Apple goes inverse head and shoulder, bounce off that daily upside breaker, continues to push. So the next indicator that's being released is going to be available with your plan. It's going to be all the levels from the ebook. All the levels we discuss automatically drawn onto your charts, so you don't have to do the drawings. If you want to go 5 for 5, again, IV is high. You want to see simultaneous breaks. 5 for 5. 5-minute entry, 5-minute stop. Okay, ideally break below 709.68, decisive break below it. On SPY, decisive break below 658.39 on the Qs. IW is starting to break down. And you can start to consider those puts. I'm gonna have to figure out why TradingView does that every time. It just compresses the charts. If you do end up taking those puts, guys, manage accordingly. Okay. If you're done, just see how it plays out. Okay. There you go. TP where you need to. Who took the puts? Right here. Okay. Another idea. Simultaneous break. So even if you didn't take it, I want you to make note of that. I want you to make note of the simultaneous break. We're going to highlight that in the Striker Bootcamp, of course, but you're seeing it playing out in real time. Beautiful job, Jimmy. Normally, I question so much if my strategy. Again, guys, if you're just tuning in for the first time, do we have any first-time viewers? First-time viewers, put a 1 in the chat. Throw the 1s in the chat. I got your message. I'll add you tonight. Keep in mind, guys, on YouTube, there is a stream delay. So by the time I share one of my ideas, all right, it's 30 seconds late, 45 seconds late. All right, so be aware of that. Welcome, SC Jordan 17X, if I'm pronouncing your name right. As you're coming in, guys, make sure to like the video. Welcome the Ron Poe. Apple, 33% on Apple calls. Beautiful job, Jason. Down over there, IWM SPY, SPX puts, combine hit my target. Beautiful job, Ashok. Yeah, Apple is out of here. A good call, Mr. Basketball. Who took the puts here? Okay, who took the puts here? So the idea provided to the strikers is right here. All right, so this is the same setup. All right, I want you to take screenshots of the setup. Same setup as yesterday. The two trades we took on SPY yesterday were these. The two trades we took on SPY yesterday was this exact same identical setup with synchronized selling. All right, so 5 for 5. 5-minute entry, 5-minute stop. You can use whichever 5-minute target, 5-minute target, 5-minute target, takes out those two pivots. Okay, for a quick little scalp. So a new 5-minute candle here. And the way you would trail it is 5 for 5 still. Yeah, 100%. It's a clean chart, but the IV is the trap. Okay, so the put trigger to take the puts. Right there. So about a small appreciation there for scalp. Close to 30 cents. And look at the IV, guys. The ATR, 52 cents. We're now less than an hour away from FOMC. Less than an hour away from FOMC. SMCI. How are the spreads on SMCI? Okay, it's not bad, actually. Let's take a look at SMCI. Just, yeah, it's very day tradable, but long term, very sketchy. Very sketchy company here. Did they report earnings? Might be an earnings candle, but maybe not. SMCI. If you took the calls off this nice lows down there, beautiful job, Jason. That's a good catch. Double bottom. Who's riding those puts? Dollar signs if you're riding those puts. Okay. Okay, if you're still in, that 709.25 is that major next target. If it gets below that, it's trading below prior day lows. So this was just basically inverse cup and handle. So you can see the synchronized selling take place, guys. Beautiful, beautiful, beautiful. So we will have the official rate decision. We will have the press conference for you. So tune in. Like the video. Beautiful job. Jamie, beautiful job. SC, beautiful job. Maurice Warren. Good, good, good. Make sure to pay the trader being you. Make sure to pay the trader being you. Okay. All right, we'll have all that coverage. That was a nice trade. That was a nice nice push to the downside. Everything's selling off. The Q's selling off. Look at the Q's. Whether you took the Q's or SPY, you're laughing to the bank. 5 for 5. That was a good combo. Five for 5. F for F. There's one setup in the boot camp we're going to go over in detail on how to identify it and how to take advantage of it. This is a good momentum setup, right? A good trend trade strategy you can keep in the back of your pocket. Right shoulder watch here in this territory. If those lows are respected, low, 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 left, right, left, head, right. So that's a good TP in that area. So 5 for 5, just a scalping technique. We have a 5-minute entry, 5-minute stop. So in this case, let's talk about it here. Okay, so the last idea here was here. So the 5 for 5 is the price action, the entry. Everything else is lining up to go short. Okay, so now this is your entry. Okay, that's your entry. A break below that level, 709.68. This pie chart, guys, is getting a little. It's only this one that gives me a hard time. There's too many indicators. Okay, so entry's right there. Stop is up here. Give me 1 second, guys. I don't know why. Started to freeze up on me. Come on, TradingView. Okay, there we go. Okay. So entry's right here. Stop is right here. 5 for 5, meaning you see something you like, everything's setting up. You have a 5-minute stop, 5-minute entry. Okay, so in this case, you define your risk. You take the puts here. Okay, even if you took it there, it worked out, it starts to go, and you can take that nice little scalp to the downside. And this is your area to TP. This should at least be a double digit, anywhere from 15 to maybe 20% opportunity there. So this is your opportunity for that scalp. So 5-minute stop, 5-minute entry. And in the case where this trade, you take this trade and it doesn't maneuver like this, you're out. Okay, so that's what a 5 for 5 would be. It can be 10, if it can be a 15 for 15. It can be a 15 for 5, meaning, say, in this case, there's no shorts here on the 15 because they're bouncing off this territory. But I'll explain that a little further in the boot camp. All right, so let me know if that answers your question, Patel. Let me know if that answers your question. Now we might go the other way. Inverse head and shoulder. Inverse head and shoulder. Back to the upside. Yep, inverse head and shoulder there. Left head right. Can we finally get a break of this trend line resistance? And we need to get above that 710. Let me clean the chart up a little bit, guys. Okay, let me clean that up a little bit. Good, good, good. If you extract the profits there, beautiful job. Keep in mind, guys, every trade is not going to go for 500%. Base hits, base hits, base hits. When the home run comes. Is there. Okay. Okay, let's see if SPY starts to push. Let's see if SPY starts to push, guys. Let's get the likes up on YouTube. Let's get the likes up. Make sure to like the video. So if you're looking to take any lottos during FOMC, one in the chat. We're lagging a lot on Google Meets, guys. On Google Meets, we're lagging as well. Or just on... I think we were lagging a little bit on YouTube. How's Google Meets now? Let me know, guys. If you have any issues with Google Meets, I can exit and jump back in. That's our primary area. We don't want to have any lag. We don't want to have any lag there. So the chat is very indecisive. So bullish, bearish, 45-55% split. It may be one. Jen, dirty trader, dirty red. Okay. So we will discuss the extent of the strategy in a few. If you've tuned in before, I've explained it before, how the strategy works. All right. So we're going to go over it in just a few. I will take a momentary a break at around 1:30. We will reconvene at like 1:45. Okay. So again, hang tight. We will have all those things for you. The press conference, the coverage after the press conference, some commentary as well. So this is probably Powell's last FOMC. All right. And the person coming in is looking to cut rates. All right. Let's say they're going to be more likely to cut rates more frequently. Okay. Appreciate the kind words, Fishman. Okay, let's see what happens here. Inverse doesn't want to go anywhere. Now it's going to really turn to a slugfest. All right, so they're going to chop everyone up. Market is running their charity program per usual. Charity protocol underway. All right, that simply means market is not really moving. And if traders try to get involved, they just give back their money. Earnings, I would, but I got to go. My daughter has tennis. She has tennis, so I got to go take her to tennis. I would if I could. No issue. Okay, good, good, good. Yeah, so there are a ton of if you want to listen to the earnings calls, guys, you can go directly to the investor relation tab in that particular company. So go to that particular company, go to investor relations, and you can sign up for their earnings call. Some of them are hosted on YouTube, so it's a very straightforward process. But if you do own that company, and if you have a good amount of shares allocated to that company long term, get into the habit of listening to the earnings call. Okay? As a shareholder, okay, they work for you. That's the awesome thing. So when you are buying shares, right, you own a piece of the company. Whether it's a small piece, big piece, a micro piece, whatever it is, you have a small piece. All right, so get into the habit to listen to those earnings calls. If you own Apple, like a new CEO, how's that transition going to take place? What is he going to say? What's the tone? What's the sentiment? What's Tim Cook going to say? To what extent is he going to be involved? What is the plan? So this is that transitionary earnings call possibly. Right? So, and if you can't listen to it, what you want to do is you want to download the transcript and feed it to one of these. You can go to ChatGPT, feed it into ChatGPT, feed the transcript in ChatGPT. Okay, ask it to extract the key points for you, the key points you want to focus on, and then within a split second, you'll have a condensed version. All right. So if that said company you're looking to invest in, you continue to invest in for a long period of time, you need to know what they're up to. At the end of the day, they have your money. Okay? Maximizing shareholder value is critical. Shareholders are happy, they buy more. And they hold for longer. They're not happy, they sell. They move on to something else. Okay. All right. So it does have an inverse head and shoulder, but just can't go. That 710 is going to be imperative. That 710 is imperative. So what are some early guesses? Do we dump? Do we pump back to all-time highs with that FOMC? Okay. I don't see a lot of done for the days today. I think with all the earnings, I might be pretty lackluster. So it looks like a lot of the earnings. Let's actually do that. Let's go look at the names, everyone that reported earnings. And this week, we'll go over the names this week. We'll go over those names this week. So let's go to. So who do we have this week? Let's go to our bigger picture chart. If you're waiting for that 15-minute, 2 down, 2 up. Keep a close eye on 708.82. Of course, that 710 has to be addressed, but it gives you a little room to that 710 territory. So first things first, UPS. UPS did report earnings on Tuesday. Actually, let's go to before that, DPZ. DPZ is Domino's Pizza. Okay, DPZ missed on revenue, missed on EPS. Took a slide to the downside, roughly $45. All right, 12%. That's a pretty big drop. All right, let's actually go to the 4-hour to give us a little more clarity. And now Domino's is back below 350. Back below C350. So Domino's is an interesting name. So Domino's is like a hybrid tech company that just sells pizza. All right, like kind of like how McDonald's is real estate. All right, but they just use burgers to have high traffic into their building. All right, they're a real estate company. Okay, so DPZ missed. What's next? UPS. We'll only go with the big names. UPS reported. UPS double beat. After the double beat, it initially dumped and it started to pump a little bit. So even though it beat, it's still dumped. Next name, KO. KO, double beat on KO. Nice push to the upside. Next name, Spotify. Spot. Okay, double beat on SPY, fell off a cliff. Double beat on Spot, fell off a cliff. Next name, GM. Also reported. So zigzag on GM, right? Double beat, pumps, then dumps. Next name, we got Hood. Robinhood, that is. Double miss on Robinhood. Pretty significant slide to the downside on Robinhood, okay? Pretty juicy slide to the downside on Robinhood. Now Robinhood is back below 70, or it's right at 70. All right, so Robinhood couldn't afford to take that slide. Unfortunately, slid back to the downside. Next name, Bloom. What's the STX? No, BE. BE. Okay, Bloom, nice push there. Okay, double beat. All-time high on Bloom. Visa. Okay, Visa did report as well. Visa. So Visa here. Visa beat, pushes the upside. So the only ones that beat and pushed were Bloom, Visa, and Coca-Cola. Everything else, whether beat or missed, slid to the downside. Again, without too much context on what they said on the earnings call, just from a technical standpoint. NXPI. Semiconductor name. Okay. Double beat, continues to push. SoFi. Complete collapse, back below 17. Okay. Double beat, complete collapse to the downside. Next name. That reported this morning, Humana. Okay. HUM, I believe. Yep. Double beat, nice little pump. Of course, today we have Microsoft. Okay. So tomorrow Microsoft can be back below, can be back in the in the teens, right? The 412, 13, 14, 15, or it can be in the 440s. It can go either way. We have a Microsoft reporting. Amazon reporting. Same thing with Amazon. Got above 257, 258. Nice little bounce. Amazon can either make more all-time highs, gap up, make more all-time highs, possibly into the 270, 280s. Okay. High 270s, 280s, or it can recalibrate and drop back below the 250s and possibly back to 240s here. Can go either way. Just depends. Meta also reporting earnings. So Meta here, right, can either end up here or end up here. If it goes beyond that, that's beyond that expected move. And we have Google also reporting. Okay. Same thing with Google. So very, very similar situation to Amazon. Google made all-time highs today. Downward compression break. Can get beyond all-time highs. Possibly open up above 370. or start to reset, get back below the 330s. Ford has been in the teens for a long time, all right? Okay, Ford again can either be in the single digits or possibly crack back above 15. QCOM, just depends on how the earnings unfolds. And we have QCOM at 155. So it can very well get to 170, 175, or it can very well get back to the 130s. And CMG. So this one is important for CMG. Right? CMG needs a win. Right? CMG needs a win. Chipotle. Right? After the split, 10-1 split, CMG just can't seem to string together some wins. Right? It did go nice bottom out there. CMG, all right? So CMG, I would say if you're a CMG shareholder, right, you don't want to see another slide back into the 30s, all right? Like back below 30, into the 20, high 20s, mid 20s, right? That's going to be very discouraging. Okay, and we have AbbVie, healthcare name, ABBV. Same thing with ABBV. Can get well above the 240s, potentially make an all-time high, or start getting back into the 170 territory, 170, 165 area. All right, so all those names are reporting today. All those names are reporting today. Right, so where we are tomorrow can be completely different. On top of that, we have FOMC. On top of that, we have FOMC. Do we have any earnings traders in the chat? Any earnings trader in the chat? Yeah, guidance is big. I would say guidance big, right? And overall tone. How does the CEO sound? Right? Does it have an optimistic tone? Does the CEO have a dreary tone with no guidance? And the key is going to be how many times do we say the word AI, right? The key word is, I think, is going to be a little more deeper than AI, maybe memory, the memory names in AI, partnerships, right? More of the circular economy, right? There's going to be some keywords you have to pay attention to as it relates to the entire space. All right, for Google, TPUs, that's going to be a critical keyword you have to pay attention to. Apple, what is the transition plan moving forward? Like, what can we expect from the new CEO? Microsoft, they're going to have to touch on the software side of things. Software side, taking a hit, right? So what is the software side? What is the AI plan? So on and so forth, okay? Yeah, Chipotle, yeah, they're seeing some reduction in the foot traffic. Right, Chipotle. Chipotle is basically, if they don't get their stuff together, Chipotle can turn to Subway. Okay, Chipotle can be Subway. At some point in time, Subway was, I believe, by the number of franchises, right? They're the number one most popular franchise globally, could be, right? But at some point in time, Subway was it. And leadership got a little content, overly aggressive, got a little greedy on a lot of things that happened as well. Their spokesperson, right? Scandal there. So a lot of different things started to unfold, and before you know it, Subway's, I believe Subway is owned by the creditors now, or private equity. Right? It's either one of the two. And it went back to being private. Right? So Chipotle is on the clock. There's a few companies in this era that are on the clock. Chipotle, Nike, Especially Nike's on the clock. Right. That's why that leadership side of things is so important. The CEO is very important. All right, so we're about 30 minutes away, guys. We're going to take a quick momentary break. At 1:30, we will have CNBC carry the show for us for a little bit. We will reconvene at 1:45. We'll take that into the press conference. We'll see how the market reacts to the decision. We'll talk about some of the strategies, basically liquidity sweeps. Shift high, shift low sweeps is the strategy in a nutshell, along with market context. Wendy's feeds my daughter and for under $15. Free Frosty too. Yeah, I think the tried and true fast food, the model is McDonald's, right? McDonald's, right? They got it down to a T. Whether you like McDonald's, whether you don't like McDonald's, okay, they got it down to a T. And McDonald's caught a lot of flack. They caught a lot of flack during the Super Size Me era. Caught a lot of flack for the obesity crisis. Caught a lot of flack but just see how they're able to withstand that and still move forward and still grow because they have tight leadership, right? They have competent people there. From what, as we can see, what the shareholders believe in the company continues to go up. So the shareholders believe in McDonald's. Right? So everything else from the fast food side is just trying to replicate the McDonald's model. Right? And a great movie, I don't recommend too many movies, but the Golden Arches, I believe it's called the Golden Arches movie. That's a great movie. Right? Take a look at that. You get more insight on the founder, a little bit of his life story. He also has a book as well. There's a book and a movie. All right. So Chipotle will be on the clock. This would be, if I was a Chipotle shareholder, all right, the last thing I want to see is this thing dip back below the lows of the year and sit through another cycle and wait for another earning. Just a lot of things. Yeah, McDonald's is a cash machine. Yep. And their franchisees are taken care of. All right, their franchisees are taken care of. All right. Looked at owning McDonald's in Cyprus in 90. Yeah, just imagine now. Does anyone own any franchise by any chance, guys, in the chat? Anyone franchise owners or previous franchise owners? Let's take a look at the chat here. Take a look at the chat. Jake, nice chart. We got a lot of activity right here at that 710. What, as usual, 710, right? 710, everything is related to that 710. SPY put wall, format 710. Back to 710. 100%. And how do we know shareholders are happy with McDonald's? How do we know McDonald's is doing what it needs to do? All right, we don't have to see. You don't see too many McDonald's that are closed down. All right, wherever you are globally, if you see a McDonald's, more than likely, all right, just anecdotal evidence, the drive-thru is busy at any time. You don't see too many McDonald's shutting down. If anything, you see them renovating. Let's go to the 12-month. Okay, this is a 12-month chart on McDonald's. All right. So, McDonald's in 2003. Okay, $12. Since Jimmy said he had the chance at 97, let's go to 97. 97 McDonald's was. Okay, that's like almost 30 years ago. $21. Today McDonald's is $291. All right, pull them back a little bit on the yearly. All right, but I don't think it's as simple as selling hamburgers and fries, okay, to get to this kind of growth. Because if that was the case, everybody will be selling hamburgers and fries. Okay, there's more to it than that. There's more nuance than that. They have that real estate angle that they're approaching, and they have their process down to a T. You will never see a McDonald's. I've never seen it in my life. What a profit instead of a profit. Now the 97. No, the difference is if you do the comparison, buying the stock in 97 or if you had the franchise in 97. So deploying the same amount of capital. Right, of course, by then you can grow to multiple franchises. But if you own the stock, you don't have to do the work. There's no work associated. It's just you just take the initial risk. $650, beautiful, beautiful. Nvidia 20. Just imagine how many times Nvidia split. Nvidia, off the top of my mind, I know Nvidia split twice in recent memory when it hit 1,000. So just imagine that. Good entries there. All right. In the meantime, let's take a listen to CNBC, guys. On the other side of the break, we will have the coverage for the rate decision. In the meantime, guys, let's get the likes up. Goal for today, let's get to 150 likes. 200 likes. First-time viewers, make sure to subscribe. Long-time viewers, if you're looking to join the community, there's a few spots left. About 5 spots left to join. Make sure to do so. Use the code April. A new month is upon us, of course. The new month will kick off on Monday. That'll be the official kickoff. And then after that, we will have 15 spots for the month of May, the entire month of May. In the meantime, let's take a listen to CNBC, and we will reconvene in a few minutes here.
Case, and maybe we could argue the grain had sold off the Mag 7 and the valuations were stupid cheap and fine. But, I mean, look, these are the building blocks of the modern economy. Is there any reason not to own them, even if we expanded it out to the other three? These are the internet platforms. We also have Apple, Microsoft, and Tesla in the mix.
100%. And yes, I am value biased. I look at cash flows. And if you look at the cash flows for all of these four, they are huge. They are not just pie in the sky. We're not talking about price to sales. We're talking about investing in the future. And they're the ones in the forefront. They're going to let us know when to pull back on the CapEx, when the data center growth is going to be coming down, because they've got different levers to pull on their growth. And that's what I really like about these businesses. And in Microsoft's case, it's sold off quite a bit, but it's still a great business. And it falls into that SaaS value play too, but it's also got a great amount of cash flow, which they could do buy back shares and grow. So, when you look at these, we're not talking about companies about a year ago when they were kind of just leading their charts. They've come back and now they're trading much more in fundamentals than, hey, you just have to own these because everybody else does.
So you'd buy any of the four this afternoon on weakness. What about NVIDIA? Again, that's more the chip play. What about Tesla? A lot going on there.
I mean, we own NVIDIA as our largest position, and it's really, now it's broken through its all-time highs, come back a little bit around 210. Again, they're so correlated, the stories amongst all these, whether you talk about semiconductors, CapEx, memory chips. So we really have to see who's going to be spending the same amount of money. And I think last quarter, if you saw, you had some of these stocks sell off because, we were not expecting this amount of capex. I think that's kind of built in. So if things stay the same and you hear the stories that are similar, I think these stocks could still do well down the future. Talking about Tesla, I think, Tesla's very different in the sense that they've got a lot of other things going on, not as cash flow robust as the others. So really you're buying Elon Musk there than you are really buying the fundamentals of that company.
So many kind of interesting movers today on earnings. But how about Starbucks breaking out? You wouldn't think right now would be the time with gasoline prices where they are. But to the conversation we were having with Steve Odland yesterday, maybe it still is not impactful enough to really matter. And that's more of the aspirational. It's not the low-end consumer, but still.
Well, Brian Nichols has done a great job. I mean, he's come in, he's taken the playbook that he had before. It's a team approach. If you heard him this morning talk about it as well. But if you look at Starbucks, you look at Mondelez, Coca-Cola, they have executed well. The companies that are executing well, that are providing value to the customer, I think they're the ones that are going to do well in the future. And, as we get through this phase, and nobody really knows, Kelly, we've talked about it at length, how much oil is really going to affect the consumer. Right now, you're not seeing it as much. So the companies that are executing, that have the great brand, that have the loyal customers, are still going to do it. High quality cash flow companies, kind of where I think investors are being attracted to.
Yeah, a lot of those great American franchises having a pretty great session, interestingly enough. Sarat, really appreciate it. Thanks. We'll check back in soon. Sarat Sethi, DCLA. Coming up, only 3 components of the ITB Homebuilder ETF are in the green today, despite a pickup in activity this month. We'll talk about what's dragging them down next.
Today's stock market is full of uncertainty, not just one risk, but many converging at once. That's why learning to trade options is no longer an option. It's a necessity. And this one book can teach you how for free. Inside, John and Pete Najarian, 2 of our country's top options traders, share how they're showing stock investors how they use options to make bigger gains and profit from market downturns. Claim your free copy now while they last at itsnotanoption.com. Itsnotanoption.com.
We're not sure if our savings will last through retirement. Can you help?
Absolutely. Now's the time for a retirement checkup to make sure your plan still aligns with your long-term goals.
I've worked with my advisor for years, but I'd like a second opinion.
We'll review your strategy and show you how Fisher's approach can help you reach a comfortable retirement.
If your portfolio is $1 million or more, call for your free retirement checkup and gain clarity about your retirement future. Call 1-800-831-0650.
And as a fiduciary, we have a simple fee structured so we do better when you do better.
Call 1-800-831-0650 for your free retirement checkup.
Our goal is to grow your wealth and help you retire comfortably and confidently.
Call now for your free retirement checkup, and you'll receive a special bonus. Ken Fisher's bestseller, The Only 3 Questions That Still Count. Call 1-800-831-0650.
When I started Walton Goggins Goggle Glasses, I didn't know how to turn all this fancy prettiness into a classy-looking logo. But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
CIDP is no walk in the park.
That's true.
But I take Vivguard Hytrulo self-injection.
Same. It's the first major innovation in CIDP treatment in over 30 years.
Vivguard Hytrulo has been proven to significantly reduce the risk of symptoms getting worse.
And I can treat my CIDP with 1 weekly self-injection.
Don't use if allergic to the ingredients. It can increase risk of infection and serious allergic infusion or injection-related reactions. Get help right away if you have rash, hives, swelling of the face, lips, throat, or tongue, breathing problems, low blood pressure, or fainting. Tell your doctor if you have infection or fever, high blood pressure, chills, or shivering, chest, stomach, or back pain, vaccinations, allergies, or kidney problems. Most common side effects include respiratory and urinary tract infections, headache, and injection site reactions.
I'm hitting fairways with the fellas.
I'm hitting the road with my number 1. That's how we live vividly with Vivguard Hytrulo.
Ask your neurologist about Vivguard Hytrulo for self-injection.
No, don't answer the phone. Don't answer the phone!
Hello? Hello?
They're gonna get you.
For those who warn characters that can't even hear them.
She should have listened to me.
Watch top movies and series for free.
Go.
Welcome back. 17 minutes until we find out whether the Fed moves its overnight interest rate. But on the longer end, it's already going higher. 4.40 on the 10-year, and mortgage rates are following suit. Diana Olick is here with the fallout that's having on the market. Hi, Diana.
Hey, Kelly. Yeah, after basically flatlining for the last few weeks, mortgage rates moved decidedly higher today and yesterday on the news about Iran. The average rate on the 30-year fixed rose 7 more basis points to 6.45%, according to Mortgage News Daily. That's the highest rate since April 3rd. Mortgage rates loosely follow the yield on the 10-year Treasury, which surged higher today after President Trump said he would maintain the U.S. naval blockade against Iran until they agreed to a nuclear deal. Now, higher rates since the start of the war had been keeping homebuyers on the sidelines, but actually mortgage applications to buy a home did move higher last week, up 1% for the week and up 21% from the same period a year ago, according to the Mortgage Bankers Association. More supply is coming onto the housing market, and rates, as I said, hadn't moved much for a while. Real estate brokerages have been reporting higher buyer traffic recently, suggesting they may have kind of digested the higher rates and the ongoing uncertainty in the economy from the war. But it remains to be seen if this latest rate surge will continue and what effect that might have on the rest of the spring housing market. Kelly?
Indeed. A lot more inventory, I'm noticing, but like you said, still in many ways a standstill. Diana, appreciate it for now. Thanks. Coming up, stocks are expensive, according to Citi. That doesn't necessarily mean it's time to sell, though. We'll talk about valuations right after this.
Think it's all about tech, bro? Huh? Rethink innovation in all its forms. Invesco QQQ gives you access to the innovators of the NASDAQ 100 across hospitality, logistics, pharma, energy, travel, and more. All in one ETF.
Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus or summary prospectus at Invesco.com.
Good job, me.
At Public.com, you can earn a 1% match when you transfer your investments. That's 1% on brokerage accounts, IRAs, and 401k rollovers. Earn an uncapped 1% transfer match. Investing for those who take it seriously. Public.com.
What if I can build an app that works my way with Base 44? My work is chaotic, and I need tools that keep up. Today, I can build an app that adapts to me. I can create calculations, automations, and insights I need, all in one place. And I add my own AI agent that handles the routine work, all built my way. My numbers?
Okay, we're back. We are now officially 13 minutes away from the decision or no decision. 99% chance we get no cut, no raise. So let's go over what I'm going to be looking for during this time. So let's go back to SPY real quick. So mean reversions would be the approach. Let's go to our game plan chart. Let's go to the 1 to really identify those areas. Okay, so we will have the coverage for you just here. Let this chart load up here. SPY is still trying to work its way back to VWAP. SPY is still trying to work its way back to VWAP. This is the day so far. Let me take off that pre-market. And then I have an idea about the shifts. You'll have an idea about everything there. We'll draw the shifts. Okay, and then we will break down what I'm looking for. All right, so in this time, it's barely full lottos. Okay, lotto. So outside of that, there's nothing for you to do. Okay, so some of the grabs of the highs is going to be, of course, here. Up there, we have a grab there. We have a grab high the day all the way up here. If you want to dive into that territory, we're starting to see an initial pump. And then we have a grab at the lows down here. Okay, so these would be the key areas I want to see price gravitate towards. So in this case, I want to see price grab this, work its way back to 710, right? If it's just a shallow grab, if it wants to go a little deeper, breaks above here, starts to go here, then grabs this, working back towards there. Okay, those are the two scenarios to back the downside. And we have one scenario back the upside, which is a grab of these lows down here. So the very lows of the day. Okay, back to this territory there, so on and so forth. Back that 710. Okay, back that 710 territory. Okay, so that's what I'm going to be looking for lottos. Again, guys, disclaimer, lottos, anything can happen. This is FOMC. Okay, so during FOMC, those contracts are going to be moving like crazy. All right, so if you don't trade FOMC, that's a wise thing to do. If you do trade or have experience, you know this is just lotto territory. All right, so grabs there, grabs here. And that final grab up there. Okay. So that's the line of thinking. So if you, again, this morning, the bounce zone came right to that bounce zone, guys. It took some time, went inverse head and shoulder out of there, and started to work its way out of there. You can see, out of our bounce zone provided this morning. All right, so we are 10 minutes away, 10 minutes away, 10 minutes away from the official decision. We know there's a 99% chance we don't get a cut or a hike. Rates remain the same. Breed artists, yeah, we need to own like 3 Subway franchises to survive now. Wow. So you have a Subway franchise in your portfolio. That's awesome. Okay, I'm gonna mute there. All right, so what are your thoughts, guys? What are your thoughts? What are you guys looking at? For the ones that do trade lottos during FOMC, what are your thoughts? Put it in the chat. If you're a first-time viewer, subscribe. Let's get the likes up. We're still at, let's see how many likes we got. Okay, we're making progress. We're at 123, 150 likes. We'll do giveaway. 200 likes, we'll do giveaway as well. Okay, so let's try to get as close as possible to that number. All right, so that's basically the plan. That's basically the plan I'm looking to follow. SPY is back at that VWAP. Q's continue to expand. Q's taking a nice push to the upside. The 710 is a critical level. This inverse head and shoulder out of there played out beautifully. Again, took some time to play out, but played out nonetheless. Took some time to play out, but played out nonetheless. 2 minutes left. We'll also have the press conference for you. We will have the press conference for you. By no means, guys, don't feel pressure to take any trades. Do not feel pressure to take any trades. If you are done, be done. Okay? There is no such thing as pressure. Okay? You don't need to put the pressure on yourself to take any trades. There's nothing you need to take. You don't have to do anything. Someone should start a podcast called Scary Trades. Yeah. Come on, just staying with us on YouTube. Supposed to show appreciation. I think we're going to dump like always. 10 minutes away, 100%, guys. 10 minutes away. So put your commentary in the chat. Do we dump? Do we pump? Do we go side to side? Do we make new all-time highs? Do we get back to 705? Do we? All sorts of things. You have a pressure builds diamonds. Yeah, it's either the two, right? Pressure bursts pipes or builds diamonds. Are you a pipe or a diamond is the question. All right. All right, so that's what I'm looking to do there. Let me take off shockwave. Let me take off all those things there, and then clean up the chart a little bit. Boom. Shockwave hours beyond us. If you did break to purchase a shockwave, guys, great job on trusting yourself, making an investment in yourself. You'll have access to the indicator by the end of today. Just send me your Discord, not your Discord, your TradingView username. It's an invite-only script. Okay, so you'll have access to all the updates from this point on. It's a one-time payment, lifetime access. Okay, so there's nothing you need to do outside of that. There's no recurring charge. There's no initial setup fee. All right, it's just you get it, it's yours. Watch the video on how to set it up. If you have any more questions, any further support, you just shoot me a DM and let me know what it's about. All right, 5 minutes away. So we know what the decision is. It's no surprise, okay? It's no surprise what the decision is going to be, right? It's more of how does the market want to become efficient when it does make that decision? What is it going to gravitate towards? What is it going to gravitate towards? What's going on with Comey? It looks like Comey, there's a poly market on Comey. The chances of him getting arrested. Kalshi's interface might be a little better than poly market. Boom, boom, boom. So here we got Kalshi. Okay, 99% chance Fed maintains the rates. So if the Fed takes a hike, if the Fed makes a cut, and full transparency, I've never put a bet on Kalshi before. All right, so if it goes the other way, right? Let's say you're betting on the 1%. Yes, no, so. You gotta sell that. Okay, so looks like 1-to-1. I actually have to click this. Cut by 25 basis points. No. Yes, no. Okay, yeah. All right, so there is a 99% chance everything stays the same. All right, so no surprise there. Yeah, IWM is actually affected by FOMC because small caps are the most sensitive to interest rates. All right, since all the companies in the small cap land are unprofitable, right? If the interest rates fluctuate too much, right, that can impact those names because they're operating out of debt, right? They're operating out of debt in pursuit of, hey, you know what? One day we will get over that line and we'll become profitable. So if the rate does start to get increased, right, they start to get impacted. If it stays the same, we just can see back and forth, a little bit back and forth, just the market restabilizing to become a little more efficient. Okay, so the interest rates are basically how much money costs, right? When you think of it in those terms, it's how much does money cost? So they're buying money. At what rate can you borrow money? So you can get money for cheap, you can get money for expensive. Money can be cheap, money can be expensive. So if money gets too expensive for the companies that are unprofitable, that are operating out of debt, right, they'll start to pull back. We are less than a minute away. Less than a minute away, guys. Less than a minute away. Less than a minute away. less than a minute away. And back to 710. And back to here, first TP on 710. So either one of these scenarios. And back to 710. Okay, the decision is made. Of course, the Fed is not deciding to cut any rates. All right, let's see how this shakes out. We're starting to dump initially. Back at that 710. So these are the ideal scenarios, all right? Okay, those are the ideal scenarios. We are seeing a sell-off on the 5. We're seeing a sell-off across the board. Qs are testing that VWAP. SPY below VWAP. IWL below VWAP. The Dow is also below VWAP. So the Qs will be the last one, the last of the bunch to get below VWAP. Look at the time and sale. The 710, guys, has been critical for the past 2 weeks. Okay, so that's why I've been emphasizing it for so long. That's why it's so important to pay attention to these levels. And once you start to see the same things take place, you need to focus on those levels. And 710 has been the magnet for the past 2 weeks. 710 has been the magnet. So the decision is here, guys. Decision, rates will remain.
Reserve keeping interest rates unchanged at 3.5 to 3.75%, but an unexpectedly dramatic meeting with an 8-4 decision. That is 4 dissents to this decision here. 3 that wanted to remove the apparent easing bias in the statement, and 1 who wanted to reduce interest rates by 1/4 point. It's the first time there have been 4 dissents in a Fed FOMC meeting since October 1992. Let me go through it. Hammock, Logan, and Kashkari banding together, supporting the decision not to change rates. They were in favor of that, but the statement says they opposed the easing bias in the statement. Now, that easing bias says the extent and timing of additional adjustments to the target range. That has typically been something used in the statement to signal that what we did before is going to happen again. And since before was cutting rates, that was deemed as an easing bias. They want that gone. I talked about that, by the way, before the meeting. Governor Myron continued his dissent in favor of a 1/4 point cut. He has dissented at every meeting since joining the Fed last year. The statement saying inflation is elevated. They took out the word somewhat, but added the phrase reflecting the increase in global energy prices. So it says inflation is elevated, reflecting the increase in global energy prices. Statement repeats the statement that developments in the Middle East are contributing to a high level of uncertainty. Economic activity seen expanding at a solid pace. Job gains remain low on average, and the unemployment rate little change. Little context, guys. I don't know if you remember, but in the lead up to this meeting, I said one of the major questions is, did the Fed change the statement to go to neutral? I didn't expect that to happen, and it didn't happen. But as a result of it not happening, and all of the rumblings you have in some Fed officials that wanted to go more to neutral and say, you know what? The next move could be a hike, or it could be a cut, or it could be staying the same. There's at least 3 of them who felt strongly enough about changing the statement and going to a neutral bias in their language that they decided to dissent today. Guys, back to you.
Wow, 4 dissents when it's normally 0. Steve, stick around. Let's go now to Chicago for reaction in the...
Okay, guys, heard that, guys. So 4 dissents. What that means, all of them were not on the same page. So, but unanimous decision rules, right, on the verbiage, and some of them didn't want to get that cut. So we're seeing some dissension in the Fed. No surprise. This can be a little bit of alignment with the new Fed chair that's coming in, right, to show that, hey, you know what? If you do decide to cut, I did vote this way when this person was in control. So that can be the political angle or the strategy angle from those dissensions. So we're starting to see a SPY slide here. So that's the first dissension we've saw in over 30 years of this extent. All right, so the decision is out. Yes, so it can move Apple. The reason why it can move Apple is Apple tends to do its own thing, but that the FOMC decision is enough to move Apple. So the key word here is dissension. And we can get into this territory. Look at the IV. What is the IV, guys? What is the IV? Strikers, what's the IV? The IV is 44. So earlier we discussed how the IV can get impacted. This is why it's such a low, poor environment to trade. Okay, on top of that, we're so ranged. The range is so tight. So a structural breakdown, see if we can come sweep these lows. See if we can come sweep these lows. I'll give it about a 50 cent. That's about a 1-to-1, 2-to-1, about a 2.2-to-1. Qs fell below VWAP, everything falling under VWAP. Let's continue to listen.
Housing is going to keep up with the 10-year. If the Fed mystically lowered rates 100 basis points, my call is you'd probably see close to 4 3/4 in a 10-year.
4 3/4, so 475 if they went down a full point. Okay, Rick, stay there. Let's get back to Steve Leisman for some more reaction, Steve, from, as you said, the first time in, what is it, 30-plus years we've had 4 dissents?
Yeah, and I want to underscore something Rick was talking about, which is a really interesting question as to the direction of the committee here. What these 3 dissenters essentially did was bring the outlook for rates in line with where the market is. And that really underscores what Rick was just talking about. The market doesn't have to move today because the market is already where those 3 dissenters wanted to go, which is a neutral bias. And if you look ahead at the probabilities for Fed rate cuts, which don't really exist, what there are probabilities of the Fed remaining the same, and they remain, let's just talk about to the end of the year, 94% for no change by the end of the year, 60% for no change, 63% for no change by July 2027. So what this suggests, guys, is a very interesting coming conflict between a chair who we know is interested, he thinks he wants to cut interest rates, and a committee that's solidifying on the idea of making neutral policy and moving away from an easing bias.
Can't wait.
And one more
Go
thing,
ahead.
Steve. Listen, I understand inflation's on the warm side, especially since we don't know how it's going to interact with the economy down the road or when the Middle East conflict is going to end. But I will point to today's data and a lot of data we've had. We've had some very strong data. So part of the rise in interest rates may indeed be that the base case for the state of the economy is better than many thought, and it's holding up better. And even though many surveys for sentiment look negative, what actual consumers are doing versus what they say to surveys seem completely in opposite direction.
I know. Okay, let's go back. We didn't get a rate cut. Nobody expected a rate cut. Okay, Francis. But I think I want to, and if I frame this incorrectly, please correct me.
I'll let you know.
I'm sure you will, even in your nice Canadian way, which is we have 3 members of the Fed board who dissented, not on rates, but.
Look at this, guys. Crude continues to climb. Crude is at 106, about to possibly get into 107, maybe try to flirt that 110 territory, and the market is still within relative striking distance to all-time highs. Still within relative striking distance to all-time highs. Look how quickly the sentiment changes. Okay, we're starting to see aggressive sell-off here. It just seems like this trading view chart is the one that's lagging a little bit today for some reason. We're coming to those lows. SPY fell. The Qs fell below PML. SPY at the lows of the day. Okay, so you get that sweep. Okay. I want that sweep. If that sweep can take place, I'll be there for it. If it continues to bleed off, I'll let it bleed off. I'm looking at, these are Lotto 715s. 715s, they're about 25 cents. Okay. I want to see some signs of life, and I'll look to take the 715s back to the upside. I'll take it right there. I'm in the 715s. Calls. Stop will be all the way down here. Okay, or close to 50%. See if we can drag it a little bit to there, past that area. Okay, down about 7%. There we go. So something like this. So in the calls, in the 715s, Lottos, down 7%. If you're waiting for the reclaim for the Lottos, you want that reclaim. So I'm already in. So now let's see if we start to push the upside. Okay. Back towards 710. First obstacle is 709.25. Okay, you see how the contracts are barely moving, guys? Okay. If you did take them, manage accordingly. Or if you did take any other iteration of Lottos, okay, manage accordingly, know where your risk is. Our first test is going to be 709.25. So see if we can hold back above this level. That 5 minute still didn't set up yet. So everything's starting to get bought back up off those lows. See if we get a 5 minute hammer. Follow through would be great. Follow through would be great. So gravitation back towards prior day's lows. And you want to take that. If you took that, manage accordingly. The percentages are going to be a little wonky, right? Just because the contracts are going to try to catch up with what the underlying is doing. All right, that's the nature of Lottos, guys. All right, from a technical standpoint, you can see the setup. All right, you can see the setup. That first soft target is 709.25, which is a previous day low, daily downside breaker. And then after that is 710. So I want to see this thing go back to either 710 or break below these lows. JP will be speaking in about 17 minutes. JP will be speaking in about 17 minutes. Stop is all the way here. You can have your first TP here. Or TP completely. Up to you. All right. %, beautiful job. Fido, beautiful job if you guys already extracted. Good, good, good. All right, if we can get above 709.25, we'll be good to go. Yes, I'm in the calls. Yep, I'm in the calls, Lotto calls. Okay, we discussed this Lotto setup beforehand, what we want to see. So I already provided a TP, but I want to take it all the way to 710. So if you already extracted, by all means, good, good, good. Right, my ambition is to take it to 710. All right, so some of our traders already took 28%. Fido took 28% already. Beautiful job, Fido. But the main thing is I want you to understand what the algos are doing. All right, there was 3 things we wanted to look for. Grab it here, grab it there, grab it there. So one of them has come to fruition already. But I wanted to go to it's a lotto. So I'm thinking to go all the way up to that 710. If you have a better entry, an entry near this territory, you're already in the green. Okay. Let's see if we can flash above 709.25. That is that daily downside breaker. Those are prior day lows. So again, hit target already. So we need to get above that. That's our first obstacle in pursuit on this road to 710. All right. On the road again. All right. Anyone know that song? Okay, 710. Let's go. Starting to push. So this is what it looks like. Okay, this is where we are. Okay. If I take off all the drawings, this is what it looks like. Okay. TP if you need to, guys. Up 15. Okay, we're headed back at 710. All right. All right, back to 710, up 15. Go, go, go. Look at that. Beautiful setup. Okay, TP, TP, TP. My ambition is 710, okay? So don't wait for me to say TP. Do what you need to do, all right? It's already giving double digits. If your ambition is big profit, you can either move your stop, okay? Or if you just want to cut right now, that's up to you. But more importantly, I want you to understand the kind of setups you need to take during FOMC. So this is the strategy, all right? Let's go, let's go, let's go. Nice clean chart. There we go. There we go, strikers. There we go, strikers. There we go, strikers. Look at that. To a T. Okay. I'll close it right there. All right. So I'm all out. I'm all out. A little before 710 if you're still in. All right. So I bailed at that close to 710. But I'm all out. Thank you very much. Okay, but the main thing is, I told you I was going to share that strategy, how it works, what to look for, and it came to fruition. Okay, so go back if you're just jumping in on YouTube. This is what you want to look for. Let's go, Jason. Let's go, let's go, let's go. Okay. Yeah, so it still has room to 710, but again, it might want to come back to 709.25. Right, so again, if you're still in, good, good, good. It was just one shot, one kill for me. About a 20% extraction there. Okay. And we'll look for the next one. So when the press conference is here, we'll look for another one. All right. So there you go. FOMC strategy. I gave you the 3 areas to get involved. We walked through the rationale, the entry, and then we take it on this path to 710. Okay. So this is what it translates to. The reason why I'm cutting it right there, right before 710, is that's that hourly open. 709.92. All right. Beautiful job, real quiet. 25% extraction. All right, once you're done with it, be done. If you still want to hold the 710, by all means you can. If you want to move your stop, you can move your stop. If you're saying, hey, you know what, it's make or break. Again, that goes down to how you want to manage the position. All right? Just want to go down how to manage the position. But once it's green and you opt not to take it and it goes red, it's not a bad trade if you're looking for more. Right? So it's important to understand that, because you don't want to think it's bad if your outlook is a little different. It's the liquidity sweep, but maybe trapping the bars. Yep, that's exactly what it was. All right. So not only that, there was a key level there. There's multiple things there. Right on top of that, and the fact that it's a shift low. So for you to understand this, this is explained in my ebook. Okay, this is explained in my ebook. This exact setup is explained in the ebook. I talk about the different types of liquidity grabs. All right, there's different types. All right, so if it gets above 710, this thing basically hit that target. Good. So you can extract, depending on where your entry is. We did see some of our traders extract 30+%, better entry than I had. Right, some of you get extracted 25. But that was a fun trade. All right, again, you know what you have an idea. I don't want to say you know, because sometimes it can come off as being arrogant. It's more of you have a good idea based on probability which way this thing wants to go. All right, because really and truly we just don't know. It's a calculated high probability guesstimate. Okay, 37%, Jason, beautiful catch. Fido, 28%. 200, 16%, good. So these are the three things to look for. One of them came to fruition. We took advantage. And if these other ones come to fruition, we'll be there for it as well. 8 minutes away from press conference. 8 minutes away from the press conference, guys. Okay, 8 minutes away from the press conference. First 3 trades stopped out. Last 3 trades worked out. All right. Let's get to 150 likes. We're at 128 likes. If you're just joining us, we just took rates remain the same. We did have some dissension between the Fed. First real dissension in over 30 years. Okay, and from my experience, this is just aligning yourself with a new Fed chair, right? Just showing your allegiance by dissenting. Could be a 3D, 4D chess by some of the Fed members. They know Powell's on the way out. Right, that's probably what the case is, because they're dissenting over verbiage. Right, they're dissenting over how things are being said. Okay, so it's they're fighting over the small details, and more than likely this is just to show which side they're on. Cassie, I guess to it. Don't trade, Jamie. Thanks, Jamie. Wait for the close above yesterday's lows. Good. That's what I think it is. That's what it because the dissension is not. It's not a worthy dissension. Right? Verbiage is not something you typically dissent over. It's not worth this. you can have the internal dissension, but you're not going to allow it to be shown in the voting. Okay, so now crude, yeah, that's the interesting thing. Crude prices are going up, SPY is going up as well. So is that now that relationship broken? That inverse relationship getting reset? Tesla is for very experienced traders. If that's not you, I highly recommend you don't touch it. Yeah, Tesla, you have to know what you're doing, right? Tesla, you have to have a good idea what to look for. Tesla is Stressla. I like that one. Stressla. All right, so we will have the press conference for you. Okay, press conference coverage coming up for you. Let me pull up the Fed stream. If you're a first-time viewer, let us know where you're joining from. Even if you're a long-time viewer, if you haven't, let us know where you're joining us from. Let us know. And let me know how you found the stream. Let me know how you found the stream. So that was actually our first trade on SPY. Okay. Okay, look at that TP, right? Right there, top wick. All right, so let me take this off. Let me take this off. Clean that up, so we're done with that. We're done with this. So this worked out nicely. $80 on paper trading, good, good, good. It's good to paper trade as well, guys. When you're done, if you're trying to get more practice, paper trade. All right, paper trade. There's no shame in paper trading if you're just using it the right way to build your confidence up. Okay, that's a good way to do that. If you think about it, these prop firms, guys, people are paying for paper trading. Okay, right? People are paying for paper trading. So the proven ground is simulation. All right, the proven ground, the entire business model of prop firms, right, is you pay them to paper trade and prove yourself. And when you prove yourself, they'll give you a simulated environment where you can make money if you follow these stringent rules. And then eventually they will take you to live. Right? You can paper trade on your own with the same kind of rule set for free. The only thing is sometimes when we do things for free, we don't value it. Right? It doesn't have that. There's no commitment to it. It's free. Right? So sometimes that's where things can go wrong when it's free. Right? So that's their entire business model, right? To pay them while you prove yourself, and they just let you paper trade. From ATL, welcome from ATL. I found you through my algorithm. Awesome, awesome, awesome. That's why I don't do too much, because I don't know what I'm doing and I'm still learning. Good, good, good. DIA puts currently 75%, 50%. Beautiful, 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 beautiful. Value free, especially. I value free, especially the free and freedom. Absolutely. Even freedom, right? Someone has to pay for freedom. Freedom is not free. All right. Either you pay or someone else has to pay. I like to use the old analogy. The only thing free is the cheese on the mousetrap. That's the only thing free. That's the only thing. That's the only thing that's free. Okay. Yeah, we will have free paper trading. Yep. Yeah, Webull has. Maybe I'll do a video on how to paper trade on Webull. That'd be a good video. Our best performing video on YouTube is the Webull video. All right, so we might be due for another and I do another video there. On YouTube 2026. On Webull. Okay, Fed decision coming up right here at 2:30 p.m. So, what color tie will Powell be wearing? Is this his last meeting? Is he going to show up at exactly 2:30? Not sure why they're not panning over to the press conference. Because it's literally... Okay, it's supposed to take place already. Okay, there we go. I'll say blue tie. Powell is late. Imagine if Powell doesn't show up. All right, it's like quitting before you get laid off. Okay. So Powell this is the latest he's been, actually. This is the latest Powell has been. A minute late. Very uncharacteristic. Okay, we're starting to dump here. Powell is still not here, guys. It's been a minute. If you've watched these press conferences, we have not seen this before. Powell is late. Over a minute. He's usually punctual on time. And if he is late, maybe just a few seconds. I watched that. I'm getting there. Past that once. Last 4, 1, 4, last big, last 4. I turned 5K to 137K. Okay, there we go. My colleagues and I.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over, with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
No, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have I think, left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert, and monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago, and what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting. We talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut. That number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation is 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, it's a much closer thing on the committee than it was in March, and that makes all the sense in the world, it seems to me.
Claire. So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark. Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. The majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. At a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools?
So I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, feels like it's going to happen, that's a completely appropriate thing.
Neil.
Hi, Chair Powell, Neil with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. The last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. We were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market, and should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many, many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out, and it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world. It had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates. And we for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
And just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee.
Michael McKee for Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue this is consistent with what markets are doing. And again, it's a very fair question, but these changes, there is, it's a form of forward guidance, and you want to make them in a way that will be sustained and continue to make sense, and not something you need to take back, fairly quickly. So I think we just, a group of us, including me, didn't feel like we needed to be in a hurry on that markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument too, as I mentioned. It's a perfectly good argument to be having, good discussion to be having. So, and it came out the way it came out.
Well, you've got three dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the FOMC, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's That's what every Fed chair has to do, and I think Kevin Warsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. You know, I think that'll work itself out.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can. Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair, not have a kind of an outsized influence over the process.
Yeah, you know, that's just something I would never do. You know, the shadow chair thing. I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know it, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but. I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go, and if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be. They won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices?
Okay, we're back at that 710 once again. Can we get crossed above? Can we cross back above that 710 and continue to push, or do we get stifled by that 710 once again, a reset and go back into these lows? So this is one of the most muted press conferences I would say I've seen in a long time. We're not seeing a lot of activity, no sweeps, no activity, and that 710 just continues to become a magnet. We did take advantage of these calls. Eventually, they did hit a TP. We scaled out there. Outside of that, there's nothing else. If you're looking to trade this, trade that, exercise caution. And I'll see if this does come into fruition. Let's continue to listen. So as we approach the 710, we do have VWAP slightly above us right there as well, near that 710.16 territory. So those two things will coincide.
Place to be. So we can wait here and see how things work out before we act. And we'll see how much how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknowable because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know until we know. So fortunately, we're in a good place to wait and let things develop.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting as opposed to the ones with just with SEPs. Can you talk about why you see that as a net positive?
So we always said when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting and sometimes between meetings, and doing that without a press conference, I think, would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to, and I do think it's quite helpful to I try to deliver a message on behalf of the committee, rather than 18 other people going out and delivering their message, and it's going to be all over the place because we do thankfully have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented action, any action on those changes?
So I'm not going to go into the real small specifics, but what we found very quickly was that making changes, making really large changes, for example, to the dot plot or the SEP. It didn't happen. We couldn't come up with anything that had really broad support on the committee, and so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And we've looked at a bunch of things, and it's something. Like I said, I think every new chair is going to look at our suite of communications and think about what would be changes. We are the only major central bank that doesn't publish a forecast, and that's because we have a 19-person committee, and you try to do it. You try to do that at the board. That's hard. At the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then, or if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now, so it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s, the effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. Our effects we're feeling in the current situation currently, and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. And those hikes may continue to happen. And other things are going to start to reflect airline fares I mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we're at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it between 3% and 4%. We're a little north of 3.5%, so that's well in the range of what I would consider reasonable, but at the higher end of the range of what I would consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit, and I don't think there's much of a case for any case really for policy looking meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
Okay, Powell's doing his best, not making any big comments, big statements. He's doing a tremendous job, buying some time until the end of the press conference. We're officially in Power Hour, guys. Our one trade today, pre-FOMC press conference, was this, worked in our favor. This one, we'll see how it plays out. I'll probably be done for the day. On that note, make sure to like the video on YouTube, guys. Make sure to subscribe. We'll continue to listen. We'll take this until the ends, and then once the ends, we will look to wrap it up. If we're above 150 likes, then we'll do a giveaway. If not, we'll look to shoot for tomorrow, hitting that 150 like goal. So let's continue to listen here.
We had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every supply shock has the capability of driving inflation up and unemployment up. And what do? The central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those two goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. You got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. People are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising. And I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
And the message is to President Trump by staying on.
I'll stand on what I said earlier.
Victoria. Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
Well, it's to a significant extent, it is the law. And, we've had to go to court to successfully so far to defend it. But the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law. But it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day, but it's more than just monetary policy. We don't want to use our tools we haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks it would be good to repurpose those to serve other purposes, but that's dragging us into politics and in fiscal policy, so we've resisted that.
Well, and maybe another way of asking it, too, is do you think that Fed independence is as strong now as when you became chair, and if so, why?
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about. And we've had to do that, and we've been successful so far, but that's not over. None of that is concluded yet, and it's, it's really important. It's not about people who work at the Fed or the institutions. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's, that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it. And I'd like to think that I'd like to think we can get out of that era and go back to respecting what the law says and what custom has been, which is to let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect perfection, but do expect us to make decisions without political considerations and the very best analysis we can bring.
Katerina Saraiva, Bloomberg News. How would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have talked to you about?
So I think that I don't want to report on what my colleagues think. They can speak for themselves, but there are widespread concerns that these things may continue. That's all I'll say, and and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient, and Chris Waller is particularly passionate about that. Of course, so are the reserves, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page. The other thing he touched on was the idea of removing reserve bank presidents from office over different views on monetary policy, and I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine. Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy. When the history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
I'm going to just say that that's for someone else to say. I'll give you a mulligan on that.
All right, I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like inflation has not been under control for them really since the COVID reopening?
We're committed to bring inflation back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting these events keep happening, which keep driving up costs, and the best thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that. But We try to get there over time in a way that does the least damage possible, and our commitment to that is never ending and unshakable.
How would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of the blows.
I don't know that you can be awfully resilient. So it's actually quite resilient, I would say, because it's a positive thing. If I can have that amendment, yeah, the growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. The most recent data are good. And some of it is just the apparently insatiable demand for data centers all over the United States. So a lot of business investment going into building data centers, and every reason to think that that continues. So you've got an economy that's growing at 2% or better. PDFP, which is private domestic final purchases, which is really a better signal of a momentum in the economy, is actually higher than that. So that's a positive thing. If you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs, because quits are really low, hires are really low, and there's effectively no new net job creation. So that's in a sense, the labor market is in balance. But it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job. So that's pretty good. Inflation is the thing we need to work on, and it's partly tariffs, which we think that inflation should subside over the course of this year, because it's kind of a one-time increase. It shouldn't be repeated, and that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly. And we'll just have to see how that works out. In the meantime, we think our policy stance is in a good place for us to hold and wait developments.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing bias in the statement, and you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes if that was needed?
So I think that the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think there's a lot of signaling going on when you change guidance like that, and so we just, I guess a majority of us didn't feel like we needed to send a signal on that right now. But maybe it'll come to that. And the reason is because, we're kind of waiting to see what happens with events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it. And of course, we will move to a hiking bias if we want to hike, and we'll move to a neutral bias before that. But there was a difference over whether to do it at this meeting, at a meeting at which all but one of us agreed that the rate decision was correct, which was not to move.
And you just said moments ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
I want to stay until I will stay until I feel it's appropriate for me to leave. And yes, that is really what is driving this. I'm not looking to be, a high-profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional model of working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan, CNN. You've made many tough decisions in your time at the Fed, and as your time as chair comes to a close and you think about your tenure and perhaps your legacy, are there any decisions that stand out as ones that you're particularly proud of? And are there any that, with the benefit of hindsight, you would take a mulligan on?
Yeah, it's hard. I wouldn't want to single out individual things at this point. I'll just say, we, all of us together, have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us. It's been very challenging because we've been in a situation of supply shocks really for 6 years, and that's just a very different situation than for a very long time what the Fed and other central banks were doing all the time was demand management. And there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And by the way, central banks that have an inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging, and we've tried to do our very best through these really challenging times, and I'm really proud of the work that I've done, that my colleagues and I have done during these years.
Now, to follow up on some of the discussion around Fed independence, can you explain to the public why this notion of Fed independence, which might sound kind of wonky to some, is so critical? I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
So every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So after literally centuries of experience with that, the whole world moved to the different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had the pandemic, inflation everywhere in the world, and now we have inflation that had gone pretty much all the way back to target, really close to all the way back to target, and now is being buffeted by the energy shock, and the U.S. buffeted by the tariff shock as well. So, but what I would say to the general public is that's the backstory, is that don't think about it, an institution being independent. Think about it this way, that you want people to make monetary policy and set interest rates to benefit the general public and to try to achieve economic goals, which are maximum employment and price stability, and focus only on that and ignore political considerations, completely ignore them. This isn't bipartisan, this is nonpartisan. So we want to just work directly for the American people doing these things. We don't think, oh, I want to do this because the president says it's a good idea, or because there's an election coming up and I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us, and our ability to control inflation and have any respect would be gone. And let me say, whatever people say, the markets believe in that we will produce 2% inflation. If you look at longer run expectations, markets believe that there's no sense in which our credibility in the markets has weakened. It's just not the case. It's people do get it, that this is our commitment and that we will achieve it, and it's priced in. If you disagree with that, then you can go ahead and bet against the markets, but the markets are pricing in Fed credibility.
Okay, we'll go to Richard for the last one.
Thank you, Chair Powell. Richard Escobedo with CBS News. We talked a lot about gasoline prices and even you mentioned airline ticket prices, both of which are up dramatically because of the war in Iran. And so I wonder, are you seeing that weigh down consumer spending in other parts of the economy? And if so, how worried are you that that will be a drag on growth?
You don't see it in spending yet. You really don't. I mean, as one of your colleagues said, the economy has been resilient. It really has. Not just this time, but it's been remarkably resilient for some years now. The U.S. economy has just powered through shock after shock, and consumers are still spending, and that's what the banks will tell you, credit card companies will tell you, the retail sales numbers that we got most recently. People are still spending, and how long can that go on in a world where if gas prices were to go up a bunch more, that's taking otherwise spendable money out of people's pockets. But right now we don't actually see much slowdown yet, and certainly none from this, but you think logically you will, because people have a certain amount of money they spend, if they're spending 25% more on gas or something like that, then, that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern, and whether or not that might push up inflation?
So all of those things are in the models that we use to calculate inflation. So they're just parts. You can ask about anything like that, and they have a place. The staff has a place where they're looking at that and pricing in what will happen with higher prices and that kind of thing. So it's there. The effects are not that big yet. We're a huge economy. The import sector is only 10% of the economy, so we're not like a European country where 50% of the GDP is in the external sector. We're also, as I mentioned, we're an oil exporter, so we're not feeling the same kind of pain, and we're not likely to feel the same kind of pain that economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone. I won't see you next time.
Okay, there we have it, folks. Powell signing off for the last time. He touched on a couple of things, a couple of key things there. And on that note, guys, we look to wrap up the stream here. So we did see a lot of things. We did take one trade during the FOMC, the rate decision to the upside calls. Opted not to take this a little bit back against the wall into the close. So we had the coverage for you, the FOMC decision. If you're just jumping in, rates will remain. This is Powell's official last press conference, last decision, but he will still be on the board as a governor. Okay, so let's see how this last trade plays out. If you're done for the day, be done. I know we did extend the stream. Hopefully you didn't overtrade. Because we extended the stream, if you stuck to your guns and you took your trades and you just enjoyed the stream for the rest of the day, kudos to you. So if you guys have any questions, guys, we'll look to take your questions here. If not, we'll look to wrap it up here. If you're a first-time viewer, make sure to tune in tomorrow. We go live every single day at 9:30 a.m. with the most value-packed live trading show where we live trade, break down charts, cover high-impact events, and talk trader mindset. We go over everything. We take Q&A. If we hit a certain threshold of likes, we do the giveaways. We're closing in on 5K subs, so help us get there if you haven't subscribed yet. If you're interested in joining our community, go to smartactiontrade.com, smartactiontrade.com. If you're looking to access all of our tools and resources, this is your one-stop shop to get all those, to get access to those tools. We do have a private community available. Of course, we do provide the live stream absolutely for free on YouTube with a small delay, and of course, there's a couple of ads you need to put up with, but at a small cost to pay for the stream. But if you're looking to elevate your privileges, if you're looking to access all the resources and tools that the community does have to offer, make sure to go to our site, sign up, use the code April, save 15% off. Spots are filling up for the month. Once that's full, it's full. Month of May, we will have 15 spots. Once those are full, so make sure to do that. The link is pinned up at the top of the chat. If you're looking to purchase a shockwave indicator, all right, so if you're looking to purchase that indicator, take advantage of the next couple of days. The early bird window is closing out. Use the code now. Shockwave 15. I do have a video on it on our channel. I will do one last webinar this weekend. One last public webinar this weekend. We'll do one last one this weekend, and after that, we'll just start to work with the private community for a few more weeks. The ones who did purchase, a few more weeks, and then we'll wrap up the webinar series for Shockwave. So this will be our 4th webinar. If you're interested in attending, then that would be the official last time to get at that early bird special. And once the prices go up, and at that price, it's still an absolute steal. If you're not sure what Shockwave is, check out the video, sign up for the webinar. That link will be provided to you tomorrow. I'll provide that link tomorrow. If you already signed up last week, okay, you'll automatically get that courtesy email to join the webinar, and we'll see you then. All right. So again, guys, make sure to like the video. Any questions? We'll field a couple of questions. If not, as always, it's a privilege, it's an honor to navigate through these markets with you. Hopefully you found value. We did extend the stream. We provide as much coverage as possible. And now our time has come to an end. Absolutely, guys. As always, thank you for tuning in. Stay safe, and God bless each one of you.